This is London with Bitcoin Spike and VIP Trader. Just noticing we had a glitch in the microphone system. So to the extent that you are just tuning in, all the better. We're looking at kind of a, guys, exciting open 2 minutes into the equation, okay? In terms of the New York market open, we're looking at, if we look at Tesla, up and over level of resistance. This level is in play. This is a nice potential move as we, you didn't miss much in terms of the first 2 minutes of commentary. I will confirm that. Looking at the specifics here on the level of resistance, this microphone, we're gonna have to throw it out the window, guys. It's a nice microphone, but we may have to just ditch it. In terms of the specifics, let's take a look at what Tesla is currently trying to do. Now, reinforcement in terms of the top level of preceding resistance is holding as a support up, out, and over. Look at the, as we look at the 15-minute, it's not a bad feature to look at. Specific flat top resistance and just that micro. It looks like the 15-minute may want to be one of the ideal time frames to look at that micro inverse head and shoulders. Very well designated in terms of the pattern conformance here. Absolutely nicely done. So in terms of the move to the upside, I don't want to be cautious. I do want to let you know that this is the bulls to take over if they want to. It would result in a big potential move. We've gone through the details on what type of a move, what level of a move this would be. We've gone through the details in terms of the specific pattern dynamics in play from that cup and handle up, out, and over that we're just trying right now to complete to the upside. Let's take a fresh look at this cupature and handle. In terms of the market opens, we understand it can be a tricky spot for traders. You understand it could be high volatility. We can have days where most of the upside just flat out pay, period, in terms of a short, where most of the downside just flat out pay in terms of a long. Taking a look now, delving into the specific dynamics, we just see this on the 5 minutes, that specific cupature and that handle, okay? That's a nicely framed pattern. We've seen the reinforcement here. Now, what do you know as a matter of fact? We said yesterday upon, and I'll just say congratulations to anyone who structured the market around the other participants. While we were in the breakout mode yesterday, and every day when we're in breakout mode, I remind you that this area is full of orders. True? Absolutely. If you did a quick take yesterday, congratulations. We'll dig into the lower time frames. We'll take a look at the dynamics in play as this line, this top line feature. Now, this is an additional line of resistance that is coming into play from the entirety of the preceding price action. It's a big level. Okay, we're going to have broken out. I'll just say we will have broken out. Let's take a look at this on the hourly. We're in the process of really breaking out right now on that hourly. You will find a differentiation in terms of that level of resistance. You'll find the 4 hourly. This is really going to be where the rubber meets the road today, that hourly, the 4 hourly. We're up and out on the 4 hourly, up and out, just barely within a threshold really of a frustrated breakout yesterday on that specific hourly. Let me tighten this up just so that we can exactly get this essentially the condition hereof on this hourly. Yeah, yesterday was a frustration in terms of the potential breakout, slight recoup to preceding level of resistance on Tesla. Okay, and it's just nice to see. What is nice to see, and please note, is the specific breakout who got rewarded, not the traders who did what, not the traders who scheduled in, started looking straight up, right? It's the traders who reinforced after the breakout at the preceding level of resistance to engage in the market. Again, we would refer to that as structuring the market, participating in the restructuring of the market around just a flagrant breakout trader, right? So nice to see that pattern dynamic at work. We're going to take a look at NVDA very quickly as we look at NVDA up. We'll also take a look at Bitcoin that's struggling just a touch in terms of Bitcoin. So on the morning, a little bit lackluster, but she has her days. Bitcoin has her days where she is up and out and rolling while the equities definitely struggle. So just looking at the technicals today, let's take a look at the specifics for the move here. This inverse head and shoulders, sure, we got it. Difficulty for NVIDIA in terms of the, and this is just the way I'm going to tell you that if you trade quite frequently, you're going to agree with this. If you don't trade frequently and you haven't been a part of, let's say, a few hundred or a few thousand rising wedge breakouts, you're not going to be able to place this statement, but typically this is not an area based on the rising wedge that we want to be involved in, okay, on a long perspective, entering along at this level. So this is a difficult situation for, we'll just say technically for NVIDIA, because we have that rising wedge dynamic. If you've traded prolifically, if you have a book of trades and your profile is stacked into the thousands and thousands of trades, I would tell you, you understand this statement 100% completely. You understand the fact that you want to give the bulls the chance. Really, the entry would be down through this level. Somewhere, some degree of a lower entry would be understandable to allow this to trade to the upside, to give it some credit and potentially fill out this pattern in terms of the flat bottom support. Okay, this specific pattern. We're pattern guys. We're very, very tuned into patterns as we were to look at flat bottom support, ascending line of resistance. This is a frustrating feature in terms of, okay, we'll have to beat a rising wedge up and through to this zone. We have the targets to the upside if we're going to go ahead and measure those targets to the upside, but essentially the following is going to be the case. This is going to be the resolution that you have to deal with in terms of a compromised profit equation. The compromised profit equation would be the following on NVIDIA. With the rising wedge feature, to the extent that we can perform up, out, and over nearly to or in excess of this preceding on a full completion, we're noting the 50% max probability fractional completion. If and upon the instance that we can get up to this level of resistance, ideally on this macro pattern, we understand that this will be a target, okay? That conclusion of the demand function to the downside. Now, we're always prepared to leave any target behind. I always say, if you have a target, what do you need to get to your target? You need a pattern to get to your target. So this is one of the, I'm just gonna say, a compromised demand function in terms of the trading that is presented right now, the trading dynamics presented. And so the decision-making process, understand, the decision-making process for the traders, let's say the bigger guns in the market, we will include you in that category, is, would I prefer to settle in somehow sideways? Would I prefer somehow to settle in sideways, just me personally, as you evaluate this profit equation? Or would I prefer to head up and then potentially head back down? Now let's say, would I prefer to go to the 50 and back down? If you had, or prefer to go to the 100 and then back down, as you look at the volatility we were noticing yesterday, without a doubt, if we look at Tesla up 1.5%, NVIDIA up 1.3%, let's just touch in with Bitcoin here. Now, Bitcoin coming off of, as we were to look at it, Bitcoin coming off of the specific 200 weekly moving average. If you're in a short, congratulations on that. It's paid 3.6%. Not bad, 3.6% in a number of days there, 3 days. Looking at that frustrating level yesterday, we were prepared for lower action, without a doubt. We were prepared for that lower downside move and just trying to pick up. Take a look at this 8 hourly, 4 hourly, etc. Across this line of support. We're technically beyond it right now. It's not exactly where the bulls want to be, but we do understand one of two things. First of all, one, Bitcoin likes to push below and frustrate within a threshold of these levels of support. Be prepared. If you trade Bitcoin, you know this. You know she will wine and dine you in this zone and make you pick up the check. Yes, indeed. She will do this to you, okay? So be careful of Bitcoin in this zone, just within a threshold. She'll push this line. She will be happy to push this line just to the other side of it. But while we're on that, past that breaking point, it's just it adds an additional level of complication, which we're accustomed to in terms of a rebound move to this preceding level of support. Bulls, of course, are engaging underneath this bearish pattern. Where do bulls become interested? Underneath descending triangles, right? Where the bears put their foothold in, their specific footprint, we'll say, bam, well, the bulls are ready to charge back in and get that recoup move to the preceding level of support. You got it. That is a sweet move. We focus on those all the time. If you're trading Bitcoin, congratulations. And nice to have brought you a little bit of the rationale there in terms of just expecting that downside price action. The 4 hourly Fire and Ice has engaged. Take a look at your color-coded bull bear scenario here, okay? In terms of the green versus we have one green Okay, remaining 2 greens remaining. The rest is momentum, stochastics, lined out on all of our time frames. We just flipped green there on momentum on the hourly. Noted, the hourly just trying to flip green live. Okay, so noting though that you're looking at a lot of downward momentum, a lot of downward in terms of just bearish conditions on your stochastics. That's just that's the story on Bitcoin right now. So nice to visually be able to see that demonstrated on every time frame. It's very important. And as you would look at, equally important, you see that live move, an attempt to recover up and through that hourly, right? That hourly momentum. So that hourly has been trying to recover. You can take a closer look at it, trying to recover, flattening out just a bit, right? This has been a very inconsistent time frame in terms of the momentum. We note such. Take a look at the 20 moving average on the hourly. It has paid very well. 1, 2, 3, really 4 times in terms of that process of the 20 moving average being an active target. It is a very active target, something we can look forward to. A level of engagement, hey, we'll take it. Now, the question yesterday was, can we get like a 4 or 5 print? You got it. That was the question yesterday as we left off on Tesla. Can we get a 4 or a 5 print, meaning like a 4%, 5% move on Tesla? We got it yesterday, didn't we? We really did. So the question today, again, is going to be, can we get a 4 or 5 print on Tesla, on NVDA? And as we discuss those issues, just understand you're in a market that's considering that on a daily basis. While everyone, guys, wants to scare you. What was this, a week ago, 2 weeks ago, where everyone is scaring you to the downside? My good gosh. Yes, okay. You don't need to listen to them. You need to technically pay attention to what you're looking at. Look at technically reinforceable levels of support. Look at your technical dynamics in terms of your probabilities. Be prepared for downside, but don't get into the doom and gloom of the market, guys. Don't get into the Great Depression talk while we have an opportunity to pick up that support. It's just real easy stuff, right? Waste of time. And I'll just tell you, 10 times out of 10, not 9 times out of 10, 10 times out of 10, who has the right answer in the market? You, okay? 10 times out of 10. I'm going to tell you, it's not going to be really a CNBC commentator. It's not going to be a Bloomberg commentator, much less anyone of a lesser caliber. 10 times out of 10, you have the right answer in the market. And if you don't, you need to fix that and work on that. All right, so that you're the ultimate authority in terms of, guys, the discussions that we have, just do it so that in terms of the discussions that we're able to have here, they continue to progress. That's what's exciting about BIP. Number 1 trade group. Excited to say that. We've caught some just gangbuster moves this year. The Tesla trade was super nice. Got a lot of great Bitcoin trades, primary focus Bitcoin. So as we look at this, don't mean to slow down right out of the starting gate, but 15 minutes into the, I wanted to dig in early. You guys know I wanted to dig in early. You never hear that from me, huh? You never hear that from me on a live stream that it's like 5 minutes or like 3 minutes into the trading session, and I want to dig into the lower time frames. I want you to note the 15-minute, the specific topside band, uncross over, and a breakout with a potential gap fill below. So one of the reasons I'd like to dig into the lower time frames is to identify any maximum probability moves, right? To identify any potentials for a throwback or frustrations in terms of this breakout, because this is a breakout move. It just is, isn't it? Let's take a look at, I'm gonna go, if we're gonna go into the lower time frames, we're gonna go into the back, and we're going to operate a little bit more in terms of just some focals that will be really reserved for our VIP. I'm just gonna say that to the extent that you can see the chart and know what's going on with this pattern framework. To the extent that, guys, you're trading and you've put the time and effort in. As we look at the Tesla 1 second chart. Now, this is a highly detailed level of price action that we would look at. I'll caution you if you're not accustomed to operating. So we see a bit of a flat top attempt there with a curl up attempt, trying to pop. There you go. On the specific 1 second time frame can be very aggressive, can be very unpredictable, and if you have not trained up on the 1 second, 5 second, 15 second, just don't play with fire until you understand the proper dynamics of what's required to really, really effectively operate at these lower time frames. Once you've done it and you understand it and you get it, you don't need to draw your charts on the pattern. You just don't, and you won't. Once you see patterns build out and you're familiar with a specific time frame and the construction of price and your probabilities, you're going to see a 50% max probability completion. You're going to see the patterns in play right now without necessarily having to draw them out. You'll see your throwbacks and your pullbacks as they occur. You'll just start to see this more and more. So nice to see bulls doing what? Pushing up and over flat top. Where are orders? You know where the orders are, right? In terms of a preceding flat top resistance, you got it. Orders stacked at the preceding flat top resistance. Orders stacked where also? What just picked up? Preceding lateral pickup to the left, you got it. Looking at our real guy's preference here would be a flat top resistance, true? Yes. Seeing bears engage and push back down to preceding level of resistance where orders were quote unquote stacked. What's the relief valve here? The relief valve here was a flat top resistance, giving the bulls a little bit of a break because they accomplished this move up to the preceding level of resistance. And in terms of a volatility equation, what was established herein with? Not just a breakout parameter. Let's pay attention to this. Not just a breakout parameter of a flat top, but as we look at our key focal, first of all, I'm going to draw a flat bottom support here, which was established by the bears. We'll give them a bit of credit on this downside with hit 1, hit 2. Okay, dual pivot flat bottom support. And while we have a threshold for the bears to beat to the downside, bulls to beat to the upside on the Tesla breakout, what do we know? We want to identify expanding volatility. True? Yes. Let's do that as macro as we can on the 1 second time frame very quickly. Okay. I know that you're operating as you were to trade and digest these dynamics much more quickly than I'm delivering the information now. Again, this stream is not intended to trade live. It's just not. Okay. If we see ability to really transfer the information live at a pace that would be really constructive, fantastic. We'd love to enable that, but YouTube has us slowed down. Was it 8 to 10 seconds? So we'll take that 8 to 10 second slowdown and talk about the specific parameters in play that are going to be essential, not just on the current trade, but hopefully on every trade. Right now, the specific flat bottom support, looking at the complication with a preceding lateral pickup here. This is just why I'm going to recommend, if you're on the lower time frames, the lowest time frames, and you don't have experience on these lowest time frames, you need to put the work in to get the experience on the lower time frames to where it's literally just a directional show. You can spend time on any asset that I've heard of, that I've worked with traders throughout the years. You can spend time on any asset on a lower time frame and develop a level of consistency in your trading. I've never seen someone who spent the time not develop a level of consistency in booking trades. I just haven't. So you can call that just a consistent dynamic that if you were to try that out and do a test run and it weren't to, and if it were not to work out as such, I would hope that you would let me know and say, this just has not worked out. I don't know why. And I'll say, well, let's talk about potentially why, and let's get through those details. Now, the first thing that we did really was to try and lay this out on a macro level. True? Yes. Try and lay this out on a macro level in terms of Tesla. Why did I go with this specific feature here? Instead of getting involved, just so that you know, just so that you can understand as we see Tesla just backing off a bit here. As we look at the ability to have constructed a volatility equation at a higher level, what am I cognizant of? I'm cognizant of, easy for me to say, pardon me, cognizant of any potential for a micro pattern to disappoint to the extent that it were to be involved in a formulated macro, let's say just a larger macro consideration. What's going on here? Well, bulls have orders along the level of support, right, on the larger macro feature. What else would we want to do? Identify any additional downside targets. Now, as we looked at the volatility expression, now, this is going to be the question for you for the morning. I just want you to register in with this. When we had this up on the screen, when we had this up on the screen here, you saw the volatility equation, true or false? True or false? You saw a volatility question as I was discussing the fact you would not need to at some point draw all of your patterns. You'll still draw them. True or false? You saw an increasing volatility here. True. Okay, now who saw it? Bulls who want to go up. True. Who also saw it? The bears who want to do what? Engage on a level of resistance and take advantage of this move, right, to reward the bulls down to the level of support. Entry. So if you caught this visually, which I know the ones of you that did, okay, and as you look at this, as you trade hundreds of these or thousands of these volatility expressions, I'm just going to encourage you, look and see it from a bullish perspective. Look and view it from a bearish perspective. Take a look at the other side of the coin that you're missing as we look at a level of resistance and how many of these are going to bust. Let's just say, how many of these are going to bust on the first breakout? With what degree of probability are we going to deal with that? You've seen empirically, cross asset on everything, that you look at empirically, how many of these like to bust on the first breakout? Based upon what you've seen. How many, guys? You're trading hundreds of these, thousands of these. This is volatility. This is why we're in the markets. So you need to have a good answer for that. You need to know straight out of the starting gates, okay, I know how many of these like to bust on the first breakout. And you need to know why and back that up in terms of even fundamentally, you know, who is an authority in the markets that's saying that we're really likely to bust here. Yeah, you got it right, huh? Prechter, etc. You got it. They did enough research, guys, on that. Is it required? No, it's not required. Do we have a gap fill? Yes. Have we filled the gap? No. A little bit of a cautionary pickup along the level of support? Yeah. Reminds of NVDA the other day. True? Yes. However, I want you to understand the dynamic as we didn't have any charts up. We didn't have this larger framework in play, but we did in this zone say we're going to go to the macro feature here as large as we can go on. You got it right. As large as we can go on that 1 minute or the 1 second time frame. Why? And not screaming through a level of support pickup in the context of the diagnosis or the evaluation there, but what is in play? Wanting to get you to the point where if we're not drawn on the screen, first of all, you see the specific volatility question in play. Yeah. On the first breach thereof, without even having really drawn it on, this is what I want you to be able to see. When you look at the 5 second and you see the expansion and volatility here, do you know we're primed for a bust at this level? Okay, trade them enough. Trade these enough and you'll say, yeah, likely. It's possible, right? As you see the volatility expression in play, as you see the potential for a bust, and as you're looking for a reason to go up here, what's your immediate solution to the equation? And I need to get on this line, bam. This here's fine, but I want to go long, I want to go up, where do I need to get? I need to get on this line, bam. You got it? I need to get on that expression of support, and Tesla being a bit catchy, surprise, surprise. You're on the 5 second time frame, okay? But as you look at the dynamics in play, you got it. As we're operating on the micro here, and you're able to digest quickly. Okay, and now guys, this is off the cuff. This is out of the starting gate with nothing drawn. There's a volatility play. There's a volatility pattern in play. Likely what? Likely bust on the first breakout potential. The fact that we're on the specific 5 second already should give us a bit of pause. But it's a great way to visually identify our expanding volatility, to look for a breakout to the upside as it's going on, to back off of the ultra micro patterning, which could be inconsistent, and to immediately shift mentally into, and while I was sitting drawing flat bottom supports at this level, another flat bottom support, preparing for the specific topping formation, okay, The conclusion here is nearly immediately upon the breakout for the bulls, I got to be down here. Boom. True, you got it. If you're there in terms of your operation in the market, fantastic. If you're not, rewatch, if you can, rewatch the beginning of this stream. Okay, rewatch it. Listen to just really how you knew. Listen to it again, like you'd almost look at a critical movie or something, be like, I don't know, that character, I don't know about him. Re-listen to the way that I approached into the specific, and we're gonna try to go macro, and laying this pattern out with the challenge to you being what? With the challenge to you being, are you scheduled in at this level, essentially? So that's gonna be, essentially, as you're trying to go up on any specific pattern, we discuss this all the time, as you're trying to go up, and you're focused up and you're scheduled into a micro, just be prepared to operate along a level of support. This specific dynamic in terms of that volatility is critical, right? It's just critical. So in the context of the breakout, let's go back into and just seeing volatility, guys. Just a definite level of volatility as we look at, you just see how micro those are after being on the micro time frames. Now we're on the 3 minute. Right, so that 3 minute, we missed the shifts in momentum, right? We just did. The 3 minute kind of surrendered here in terms of that shift over in the momentum as we went to the downside, crossing underneath the 20 moving average. And I'll just tell you, I don't mind at all slowing down to make sure that what was put into play this morning was a respect for what? Okay, was a respect for the specific lower level of support pickup. In the context of trying to go up, slowing down enough so that you can even rewatch this and understand, okay, look, this has got to be on the radar. It's the benefit of a volatility expression. True or false? The benefit is that you have a value-oriented consideration in terms of when you're at this point, you're looking down here. Train yourself when you're at this point, and whether or not, please train yourself whether or not you have the drawing on the map, on the board. I know you want the breakout, but what are the participants who are attracted to the asset for volatility? What are they looking at here? They are looking here. Boom. True? Yes. You see why we focus on such. So interesting dynamic, but not something that we don't understand. Okay. As we look at this micro feature as well, I want to know what Tesla is telling us about essentially the trading dynamics on the specific lower time frames right now. One of the benefits of looking at the lower time frames is being able to digest what is going on. If we were to look at a descending triangle with a attempted throwback, nice throwback again. This was also a tip off in terms of the specific patterning. What does this remind of? That reminds of Bitcoin right now. Again, parlaying over Tesla into crypto is job number one, right? Because Bitcoin, when she gets going without a doubt. We like the opens because there's a lot of volatility and a lot of pattern recognition that can go on. So looking at, I think they surrendered their Bitcoin, huh? They surrendered their Bitcoin. But looking at the dynamics, we're going to note that specific pattern did play. We're going to note we have a gap fill just on the open that is playing. We're going to note the fact that this is not a light breakout, is it? Just not. I know. Taking a look at a cool off on equities, looking at 0.21%. NVDA holding up relatively well, kind of parked, isn't she? NVIDIA parked, just looking at another tough area up and over resistance, right? And understand the magnitude, just do this very quickly, understand the magnitude of, no, this was just, let me go back to this chart. These hotkeys somehow got mixed up in here. Let me go back to NVIDIA. Hope you're all having a great morning. As we look at this, this specific move, this is a big move. This is a big potential move for Tesla. So to just say, no problem, just say, hey, here we go, let's just get out up and over, this would be a big move for Tesla. Tesla's kind of strutting Tesla's stuff. You guys agree? Matter of production and time, we need the profit equation to really get going on Tesla. Fact. We need, in terms of the, guys, the business story, the fundamentals couldn't be too much more exciting. There's a lot going on with Tesla. We like it. We like it. We just want to see it ramped up. We want more trucks sold. This is the bottom line. We want more trucks sold. We want more robots built. We want more, you name it, right? We want to see it happen. It's exciting to be a part of the market. So in that regard, we enjoy paying attention to it. We want them to own more Bitcoin. That'd be cool. Now let's throw that into the Optimus. What is Optimus going to do for all of you? Optimus is probably going to trade Bitcoin, right? We got it. Optimus took all my Bitcoin. Possible. Now, in terms of the specifics, we'll just note that this is a big breakout. Okay, it's a big move, guys. Looking at the specifics here, so bulls having a run at the breakout. True, yeah. Bulls get it done. No. What do we fall into on that micro time frame? The most distinguishing, highly distinguished element in terms of the pattern dynamics. You got it. Dang it, huh? Okay. So descending triangle. Yeah. Bulls, do they have a chance? You bet they had a chance. Could have absolutely just rocked it to the upside. If you're already on your lower time frame, okay, if you're already on your lower time frame, the 5 second and the 1 second, and you were trading a throwback to the preceding level of flat top resistance, hey, rock and roll it. Boom. Bam. Nice moves. Bam. Multiple hits back into that flat bottom support that you're going to, guys, these levels traded right off the gun. We don't often schedule into a 0.4, 0.5% move. We don't often schedule into what, guys? We don't often schedule into the lower time frames on open. We just don't. The fact that we're in a breakout scenario would just encourages me to get a little bit further involved. And I just want to know that you saw this in terms of the breakout this morning. What's important for me is to register that you saw, if we were to look at this on Tesla, I want to know that you can just spot without drawing the increase in volatility. I want to know that you can understand when we're on a first breakout, okay, of a volatility expression just by looking at that. That's important for me to know that you've traded these patterns enough that where you can identify them right off the bat, that you can identify a danger zone on a first breakout, and the fact that bears love to try and collapse this price down. Yes, to where? To this specific level of support. True? Yes. So those are just very important to me for you to be able to assess very quickly based on just a sheer visual without all of the specifics necessarily being guys drawn up on the screen, right? So if you can do that and did that, congratulations. That's a big deal. Use this as a bit of an instrumental as we were looking at the breakout potential. We've returned to this trading range without a doubt, which was where we ended up yesterday. You got it. The 15-minute top. Remember, the 15-minute completed straight up to the top. Okay, so we're going to just see on open a bit of a catchy price action, guys, deployment into some bulls that are looking for a big breakout. So what do you do if you're a bull? What if you do? Well, I just carried this down like almost a percentage point. Okay, great. Are you overexposed? No. Do you have a stop loss? Do you have a stop loss? Are you working on precision entries? Okay, if you're working with higher margin, do you have a stop loss? Are you able to deploy those now? Okay, with a tighter stop loss? Are you still in the float and wait and let's see boat? We're just going to float this thing through and just kind of wait and see. We're going to let it just take our time, float around and wait and see. Or are you assessing your specific target entries on a micro basis on the many screens that you have up, on the multiple, and not just the one screen that we're looking at, on everything that you have at your trade desk? Are you assessing and able to consistently schedule into, let's say, a level of underwriting concern? What picked up? Hourly cap line? Fact, right? So this is the area what engaged as well, hourly top pro line. We'll note it. Rebound on this specific cap line occurred yesterday after the signal fire. Boom, re-hit on the hourly, right? Not trying to catch it all live right now. That's going to be for another day. And it's going to be for a day. We'll have fun doing that, okay? We'll be doing that hopefully in somewhat of a kind of together kind of context, something really cool. We'll be doing that kind of together at some point. That'll be really cool. Playing a bit coy is Tesla this morning. How is that? How is she playing coy right now? Well, because we had this real micro expression in here that probably got some people caught up in terms of a potential breakout, but we had the macro expression. Fact. Now she stayed a little bit off the level of support, so I don't even know if your order picked up here, dang it. It might not have. Noted? You might not have picked up on this level unless you were playing the hourly cap line. Pay attention. Unless you were playing the hourly cap line. It didn't pick up my order here, dang it. What are you gonna do? I'm just gonna jump in here. Bad idea, it didn't work out too well, did it? So it was protective function in terms of that lower level of support. We'll note such. A little bit of catchy action now and playing a little coy is Tesla. Why? Because you have this micro feature here, you've got this macro feature here. Granted, we're on the 5-second time frame, but I mean, what do we got going on here, guys? Call it. What do you have going on here? What do you have going on here? What is it? 100%. Boom. You got it. Expanding volatility. So quite a bit coy is Tesla in the fact that she's driving down the center lane of your volatility expression, which is one way the market can beat a volatility expression. I'll just tell you, if you have a volatility expression, and you guys are very keen on this, I know that you figured this out thus far. Like, hold on, if I have a level of support and resistance, volatility that I'm looking for in the market, I have to say, and we need to cover this because we really haven't covered it, but we'll talk about it this morning. Say I have the bulls hammered in, hand off to the bears, hammering in, handing the bears handing off to the bulls, handing off, bam, to the bears. Let's say we get into this and we've got a potential busted pattern again. What's the greatest way for this to beat the market? You got it right, huh? Like, whoa. That's not in the cards. That is not in the cards. Something's wrong with the equation. You got it? That's not going to get us where we want to go. Yeah, when you trade these, you'll pick up on it here and there. I know you've already seen this. Well, wait on, hold on. No. This is not going to work, huh? No, I need the bears to hand off to the bulls, to hand off to the bears. Okay, so when we start to see this type of an equation, Houston, mission control, we have a problem, period. Because we are built around the fact, and so it's a great morning when I say she's playing a little coy with people. This is just the one way that the traders can look at this and look at Tesla and be like, you expect me to trade you, correct or incorrect? Let's go through this real quickly. You expect me to trade you because providing me with an equation of expanding volatility and just draping down the middle of it to the downside, that's not on the map. That is not on the map. I have a 72+% chance of breaking this top line resistance, period. And what becomes critical at that level? What becomes critical? Your angle here on the top line resistance. True? You betcha. The further you push sideways, what this does is this makes it difficult to pick up a nice featured entry along a level of support. Yeah, we need to get down here, fine. Then I need to get back where? Boom, to the upside. So the ambiguity and the difficulty as you push down this center lane here is what? What's the ambiguity? What's the difficulty? Well, dang it. I need to prepare and operate along this level. I need to prepare and operate along this level. I need to prepare and operate along this level. You got it. So you've got just this, I would just say this gray area of any midline function progression here along this expanding volatility that's just not favored by anyone who appreciates the volatility equation. It's just not, it's not the move we want to see it make. We want to see as aggressively as we can, as quickly as we can, moves between the bulls on support, bears on resistance, right? Again, reframing. I want this line of resistance. I don't want it flat. I'll take it flat in a different context and apply different probabilities to it. I don't want this top line flat. I want it descending. Fact. I want this level of support descending as well, a divergence between the bulls, bulls on support, bears on resistance. But I'm going to say this, I don't want the bulls to be scheduled in like this. I don't want the bulls to be just giving up. I need the bulls to engage. I need them to have a proper expectation here of being logically expressed as being involved in the market. And I need bears to, I'm going to say this, bears, I need you to provide, and bulls really to get up to and perform to a level Where? To a level that I want to recoup to. I need to be able to recover to a level that is angled as such to where my 72%, my 75 to 80% is, depending upon what patterns you get involved with here, in terms of a fractional completion to the upside, you could be at a nested 85% probability of completion to this upside, compounding in with an already 70+% probability of completion to the upside, depending upon the pattern and dynamics that are placed before you here. True, huh? So as you look at, let's cover a few things. As you look at a push down the middle of one of these, we don't like it. We don't like it. We don't need it. Raise a cautious, let it raise a little bit of a flag. Okay, when you see that, we're not gonna trade something that's not consistently promoting direct. It seems like it turns into more of a liquidity issue than anything. It can be a little coy in this and that, but it just seems like it turns into a bit of a liquidity issue, right? Like, why are we streamlining down the middle of a volatility equation and we're directional, yes, but we're losing our volatility, right? It's like there's a programmed price function down the middle central lane and we're just losing our volatility. It's not what we want, right? So with that said, okay, with that brought into the framework, that's just some good TA to discuss some good approaches on your trades, kind of trade tactics. Even a bit further coy is now a flat top resistance. True? Yeah. Okay, so as we look at bulls technically showing up, but in the context of what? So what do we have here? Let's look at this from a standpoint of the 1 second. What we have is a descending triangle and an expansion of volatility. What we have here with a flat top resistance set. True? Yes. Micro expansion of volatility, always on alert. It is what? It is a fire alarm. It's a 10 alarm fire. Boom. Where? Heads up, down here. Anytime you're parked along a level of resistance here and you've got an expansion of volatility, you have a 5 or 10 alarm fire that is pulling your attention, I promise, if you do this enough. If not, you tell me. I want to hear from you. Say, no, actually, I've done this 15 times. Let's say the last 50 times that I've done this, London, no, actually, it hasn't happened once. Do it 50 times. Analyze this 50 times on any asset. Try it. Then talk to me. Do this 50 times. Micro expression along the level of resistance, 5 alarm fire. The alarm at least is going off. Okay? Boom. Level of support is in play at that point. Okay? Just take a look at such. So again, flat top resistance, and we're noting this dynamic of its breakout city, right? Breakout potential, breakout potential. This is a breakout. You got it. This is a breakout. This is where we're at today. Now, as we step along and have an additional breakout level to the upside, we became very comfortable in this zone here yesterday, didn't we? Really upon that preceding level of resistance. Let's back up a little bit and see where we're at without getting too anxious in terms of jumping the gun. And good morning. Hope you're all doing well. Nice to interact with you. Let me take a look at the chats. I've been streamed into the charts. I wanted to catch that specific move to the downside on that volatility expression without a doubt. Let me take a look here. And there we go. As we were to analyze this now, we have a mid-level pivot. True. Yes, we have a mid-level pivot. And we have to say on the 3-minute, maybe the 15-minute as well. Not sure that we played this up completely, but aside from the flat top resistance that overplayed here, we're just going to note that on some time frames, just keep an eye out for this. On some time frames, we did have that middle heartbeat, didn't we? Now, it's potentially too small of a time frame, that 5 minute to call a diamond bottom. Let's just note that it was thrown our direction, okay? Let's note that diamond bottom, that heartbeat that we're looking for, that just pulse, that little heartbeat, bam, right? Let's just note that we have that on the 5 minutes, that we have that on the 3 minutes, that we had a 15-minute flat top resistance. Now, what is the standard MO that we discussed? First of all, nice throwback to this level. You want to call that inverse head and shoulders or an ascending triangle out of the right side. We're going to note the return to feature. And in terms of the specifics, where? Here. Boom. Bam. Okay. how often do we see this in the market? I want you to answer it. We commonly see this in the market. Just settle in with that fact. Okay, you've got your 5, 6, 7, 8 screens up. Okay, we're looking at and hopping through one time frame at a time to really have a good communication here, right? So as we look at that, and I know it drives you crazy if you don't have your patterns up and don't have your your orders parked here. You know they're parked here, whether or not you shorted to this level or not. You know a preceding level of resistance. We don't have to look at a heat map, book order, guys, flow, footprint of guys. We don't need to go on a wild goose chase and have Vegas lights in front of us on our computer screen. Sometimes it's cool, right? We don't have to do that. We see it every time. Guys, you judge. You assess the percentage with which we see orders parked at preceding breakout. Boom, boom, right? Even on this, quite well on this time frame here. So it's a big potential move by Tesla. We know this. It's a big potential move by Tesla. Morgan Stanley reinforcing $400 price targets. On the train late they were, huh? They didn't pick up the 110. They also didn't pick up the 195. Come on. They want to change it in here to 400. That's fine. But that's a nice move. They are reinforcing that. That's okay. Let's hope that the market's not over dependent on a bit of a fragile opinion, or at least a inconsistent opinion. But it's nice to see some of their guys come around on Tesla. Shout out to all the Morgan Stanley guys. What's up? Hope you're doing well. I hope you're doing well. Hey, so at the point of breakout, we're going to need a little bit of rocket fuel. Granted, that'd be a nice line to hit, huh? And again, let's discuss this. I'm going to set my indicator or my line breakout here. I'm going to go ahead and create an alert here, and I'm just going to get a phone call when we break this level. That's nice. I'm just going to get a phone call when we break this level. All right, the mid-level pivot. I just want to get a phone call. That's fine. We're going to get a phone call when we break the 275. All right. Now, I probably won't get a phone call if it happens and we traject up and over on an open. This was an open that was straight into a line of resistance and a breakout zone. Just log it, guys. Log it in terms of, okay, we just hammered into a breakout zone. This is a macro. This is a big deal. Yeah, a big deal. You got this. Look at this. This is some heavy talk here in the market. Is it the perfect pattern we want up here? Not really. It's just not. But within the context there, let's give it up for the bulls. Yeah, let's give it up for the bulls that if you've got an underlying position, I know you're like, go, go, go. If you're not, that's okay. That's all right. If you're trying to power in and get in secure position on a breakout, if you're trying to secure a position on a breakout, you've probably encountered some difficulty on that. We went through a decent exercise this morning in terms of the parameters that need to be in play, in terms of your levels of consideration, both in terms of the volatility expression, and we had a nice move here in specifically regarding a descending triangulation, okay, on that 5 second, 1 second. So when you're hunting for a specific entry, just be prepared that these are highly relevant. Not only in the context of a topping formation, it's classic. You're not the only ones looking at this. I promise. You know that. And really, as we look at this, we can delve into, and we started to as we attacked into the levels of established seller interest, right? The lateral pickups here. As we did this analysis early on, we started looking at the flat bottom supports. True? Yes. And what was the purpose in that? Because while we were establishing a flat top resistance, flat bottom support is indicative of the fact that sellers are in the market enough to continue to push down to the same level. Fact. All right? Remind yourself in this zone, what was the critical play? What was the look? Down through here. Just adapt to that fact that this was the specific level in play. Consider the fact that she's being a little fussy today. She's not just rolling over in terms of, and what do you see here? A nice coil, right? This would be a heck of a coil reversal. Let's take a look at this in terms of the dynamic in play here. As we were to look at, this is one of those days we could just spend all day trading Tesla, huh? We really could. We're up along the level of potential breakout zone. This is just one of those days we could spend the next number of hours and enjoy the heck out of it. Yeah, and just trade this all day long, huh? What do you think? Do we like the coil? How are we doing on momentum? Let's take a look at momentum. We need to double clutch. Yep, we need to double clutch that momentum. Divergence noted. You got it. Let's take a look at, everywhere you look in the market, I want you to see volatility. I just want you to see volatility so you can work with it. That's my goal. If you haven't noticed, that's my goal. I want you to be able to see volatility, okay? When I say I want you to trade 500 of these, yeah, we draw them all the time. They're everywhere, right? The micro, functioning in with the macro, etc. It's an equation that we see produce really overall fantastic results. With it in mind that, with it in mind of the need to be well situated in terms of the dynamics of what you're really attracted to in the markets, even on a breakout, especially on a breakout, potentially, right? Looking at, what are you looking at here? What's going on here? You got it, right? Relevant, yes. Is the only pattern in play? No. But what is it? You got it. Before you draw it out, do you have it? When you're up here, do you have that move down? Do you need to trade another 100 of these or 200 of these and work on your identification? We don't need to draw them all out. We don't have to. If we just talk about a volatility expression to the downside with a throwback, I'm just going to tell you, we have a micro, just talking about a micro volatility expression with a throwback to preceding resistance and a fly up. We don't need to draw it, do we? No, you got it. But we don't have to say it either for you to have it. True? What do we got going on now in terms of price? You see the patterns in play, right? You see a micro expression, true. You see a larger macro expression, true. All right, you see that. So with a micro expression in play and potential breakout bust potential, and lateral can pick up here, but taking a look at this, we're on guard for this specific play, which traded. We don't have to draw it, guys. We don't have to draw that, okay? Break down and below, recoup out, up and over. Reformation in terms of the dynamics in play. You just understand, where are the orders in the market? You know where they're at. You know they're along support. Within the context of attempted pickup here, what are we looking at? Up, out, and over, level to beat. What's the potential frustration and hurdle to the left? Boom. Got it? Copy, right? You got it. Where are we at on the hourly? You know? Yes. Level of resistance, kick back, pick up, orders on preceding level of resistance, attempting to flip to support with a breakout cup and handle. You got it? And some of you are saying, I also see an inverse head and shoulders. You got it. Call your inverse head and shoulders if you want to. Call it an additional volatility expansion with a partial return. We call this a volatility expression with a partial return, up, out, and over. Bulls want this or not? It will be annoying for you, I promise, at least. As we look at the hourly pickup on the capital control line, nice pickup reinforcement thus far on the capital control line. It will be annoying, particularly if you have an underlying position and you are trying to see the bulls get their act together today. You got it right, huh? As you're trying to see, and we got that 6 hourly again. 6 hourly again engaging. Just take a look at it. Put it on your charts, please. And a problem with momentum on that 6 hourly. We're going to pay attention to the 6 hourly. We're going to watch it. A top pro line on 6 hourly has engaged. You're going to be a little bit more frustrated. Don't yell at your computer or the other traders in the market. But if you have an underlying lower position, hey, come on, huh? I know, because you're watching them trying to break out when you have the courage to get in lower, right? And now they can't just push it out up and over. You've got your solidified interest in well below. So you can take credit for the problem in terms of you not being actively engaged in the market to push the price up further. Right? You just can. We're not in a bad spot with Tesla. It's nice to be having these discussions. This is a 15-minute. We need to expand this a bit. In terms of a potential breakout, not a bad line. Take a look, 15-minute wicks. On your wicks 15-minute, I shouldn't have to mention the time frame on wicks. Let's set alert without a doubt on, I don't know what settings. Let's set an alert on that 15-minute on the wicks, and let's get a heads up. Let's get a phone call. This is ready to get out up and over. Now, we would call it, I would just say a surprise hit. Nice surprise hit this morning to the upside based on a preceding, now we do see this with frequency, preceding level of resistance flip to a level of support. We're seeing NVIDIA do well right now. So they're playing their tango, right? Let's see how this tango is going. Let's go over to NVIDIA, then we'll talk, touch base on Bitcoin as well. I'm happy with Bitcoin going to the downside underneath that specific 200 weekly moving average. That's fine by me. 15-minute noting the specific up and over on the cap line. Let's take a look at that hourly and see. It's just not a perfect breakout. So now this is on more of a, let's distinguish NVIDIA and Tesla very quickly, okay? Let's distinguish NVIDIA right now, and we'll play, of course, in the entirety of the ball game here is to bring it over into Bitcoin. You got it. You got it. So looking at what we can learn from NVIDIA, looking at what we can learn from Tesla, the fact is this is a macro feature with a potential midline threshold move to the upside downside with some consequences on NVIDIA, right? In terms of leaving a potential target to the downside. We'll note that. We did this yesterday. We put this directly in the context of Bitcoin. You got it right. We did. Right? We did that layover with the flat bottom support. How many days have we spent in this area? What can we pick up on from NVIDIA, et cetera? Now, this is the macro on NVIDIA. Capiche? This is the macro. This is the macro on Tesla. Let's pay attention. The macro on Tesla is this. Okay? So whereas NVIDIA on its macro feature, this portion here on NVIDIA looks like this. Let's pay attention to this. Let's take a look, take a look, take a look. Portion of NVIDIA looks like this. Let's just say this right now. So we have a potential ascending line of resistance and a flat top that's been established. This is what NVIDIA looks like on the right, on the macro. This is what Tesla looks like on the left. So we have different dynamics in play. We are here on NVIDIA. Fact, yeah. We are at an equivalent mid-range function here on Tesla, but our breakout is here, is now. We're at a mid-level function on NVIDIA wherein we've got some implications for a move to the upside or the downside, but this is not the critical breakout zone that Tesla is in. Okay, so as we distinguish and as we compare the patterning in play, this is a much more critical level for the traders, okay, to operate up and over a level of resistance. Whereas on NVIDIA, it's like, okay, we've got some room in here to dance around. We can still get up to where, or down to where we kind of need to go and operate herein. This would be a significant breakout to the extent that we can operate up, out, and over this level of resistance. And the importance thereof could dwindle a bit, right? Certainly, could dwindle a little bit and turn into something else, as this could as well. But just be aware of the fact, the differentiation in the patterns as we extrapolate or extract the pattern features and apply them over into our trades. Looking at Bitcoin, for instance, Bitcoin's in its own expression here, right? Just differentiated from from both NVIDIA and Tesla, but similar to NVIDIA without the real, and really we need to back up. Let's go to the 4 hourly on this. Let's go to the 4 hourly and take a look at, there we go. We're gonna need to compare, and we have done this. Please review yesterday to the extent that you need to. Somewhat similar to NVIDIA, again, a mid-level function, and we can draw a similarity between, potentially, pay attention, potentially between, for purposes of a construction, again, what can we get from Tesla? What can we get from NVIDIA? How are they relevant to Bitcoin trading right now? How? As we were to look at the equities, bring over what we know from TA and can apply, and looking at the dynamics in play, what do we know? What do we have? Well, we know that we're similarly structured to NVIDIA. We're in a mid-level zone with a flat bottom support here, right? We have this dynamic in terms of a rising level of resistance, but it's like Bitcoin is perfectly giving us this perfect, this near blend of the Tesla and the NVIDIA dynamic, technically speaking. So it makes perfect sense that we're going to incorporate Tesla and NVIDIA. Why? Why? Well, on Tesla, let's just pay attention real quickly, because on Tesla, we've got a breakout in play. We've got a critical level in play, right? But hold on, because NVIDIA does not have a critical level in play. NVIDIA is just in a near Bitcoin mid-level function. So what are we going to do? Well, we have the specific layover and carryover from NVIDIA, true to form, flat bottom support ascending on our Bitcoin. Yes, we do. As a matter of fact, we do have the specific flat bottom support ascending line of resistance. But what we have is a dynamic in play, also separate and apart from the pattern construction and similarity of NVIDIA. We have kind of an ace up the sleeve on Bitcoin vis-a-vis or in relation to Tesla. Why? Well, because on Tesla, Tesla's looking at a perfect breakout scenario, a big time breakout, critical moment here, up and over resistance. This is it. This is the line on Tesla. I know, man, but we just went through and you got the same pattern on NVIDIA that you have on Bitcoin. Okay, so that's NVIDIA. Okay, that's Bitcoin. So how does Tesla come into the mix? Because Tesla is at a critical level. Tesla's trying to break out or potential failure. Well, look at this. I guess we're going to have to say that Bitcoin is indeed at a same critical level. You got it, at the 200 weekly. Boom. So, amidst the need to look at NVIDIA for purposes of pattern identification, let's work into this pattern framework. Let's see which one outperforms. You got it. And as we look at the correlative purposes for looking at Tesla as well, while we don't have the pattern construction, we have this critical 200 weekly you cannot get through. First of all, you can't get too much more or less excited, guys. It just is what it is, objectively speaking. Tesla's at the crux. True? Yes. It's a potentially big move for Tesla. It kind of needs to happen now. It's not as fundamentally, and there's some other patterns or moving averages we can point to, but in terms of the level of criticality that we would look at between Tesla and bring that function over into Bitcoin, you've got it right here, period. 200 weekly moving average. We've gone through the details, etc. So I view it as a perfect, and that, we just had a little bit of a disconnection. Sorry about that. So it's just a nice blend as we look at it. It reinforces the reason why we're involved on a daily basis with NVIDIA and Tesla. And I'll just say it again, when you trade Bitcoin, you just know it's like the guys that are always trading just Tesla and just NVIDIA, they'll come over to you and say, man, what just happened with Bitcoin? Yeah, it just flew through the roof, right? So, but we pick up on the dynamics of Tesla and NVIDIA. We bring them over to our Bitcoin trades, and if you trade, guys. You let us know how those work out. We'll let you know how ours work out. In terms of the details, that's what's going on. So we really have Bitcoin in a nice spot, technically, vis-a-vis Tesla and NVIDIA. We agree. Pretty cool, huh? Pretty cool. We discussed this lackluster level of support here. We've picked up on Bitcoin on the 4 hourly, multiple hits on the 4 hourly. You got it. Just kind of cool between, it's cool to have all three up on the screen. I think you guys will agree. So let's dig into this real quickly. Return to prior flat top resistance. I'm gonna let you guys go. We're gonna get in the back. I wanna throw some charts up and see how everyone's doing. I wanna check in with you, make sure that everything is going smoothly today. We've had some ricochet volatility. True, we have had some ricochet volatility. Let's take a look at something on a side screen. Real quickly, let me take a look at something on a side screen. And ouch, ouch. Yes, have some signal sets that fired off particularly well on Tesla this morning. That was okay, not bad. Well done. And just in terms of overall signal sets, we look at signals, Tesla signals. Not too much you're really going to miss there. Nice job there on your signal sets. I'll just say that, particularly Tesla, the 1 minute, nicely done. On NVDA, and I'll just say this: we have some velocity. I'm just going to say they're velocity-based indicators that we kind of use in the background. That we assess things at a much more particular level, technically speaking. So. To the extent that we are kind of viewing those in the background. Some of them are pre-production, some of them are post-production. It doesn't have to be overly complicated, but we have the levels of complication clearly there. If you want to look at Tesla, yes, we have the levels of complication clearly there, right? As we were to look at moves to the upside, I mean, we can go there. You know, we don't need to necessarily, but we can go there. What did this tell us here? What did this tell us on Tesla? We're up and over a flat top resistance. Okay, we're up and over a flat top resistance. This is on the 3 minute. So move up and over flat top resistance, move up and over flat top resistance. You got it. And you'll get some whiplash here with flat bottom support, technically to the upside. And you know we do have those levels in terms of a flat bottom or pre-existing level. This would be an interesting line for me to assess here. And the dynamic of the potentiality just based on the 3 minutes. So when we're looking cross time frame, we get into some different considerations, okay? And a blended time frame approach between the 3, 5, 15, 30, 45 and minute intervals, it just becomes not the greater weight thereof, but there are some increasing calculatives that you guys just know. Up and over flat top resistance. I'm going to reinforce that. If it's not on your radar, make sure that you have it on your radar. You don't need all these wild lines. This is kind of a pre-prototype in development indicator that's going to give us both operation up, out, and over flat top resistance. Yeah, up and over flat top resistance, which are also what? Which are also all breakouts. Boom, 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 boom. Nice to string them together. You see that directional bulls showing up in the market. And you'll typically see a return to A line the majority of the time where, and you guys know we trade this all the time. All the time we trade this. So what does that mean? That means what? Well, it kind of means that almost every time we see on a breakout, we really see the orders at the preceding level of resistance picked up. True? Yeah. It's rare that we don't, guys. It's very rare that we don't. So we are back home in this preceding range. Up, out, and over. And this has just been something that I've been up since early this morning, since 3:30 this morning working on this. Okay, so it's not what I do for fun, but it's required. It's nice. Boom, boom. Nice to know that we're up and out and over a flat top resistance. We saw that just very much so on the 15 minute, 5 minute, 3 minute, 1 minute. So just note such. And as we are looking back into the charts, what are we cognizant of? We want some expanding volatility to work with, without a doubt. So I will let everybody get up and let's take a look at. Let's just take a look at how this worked out. We had what? We had this volatility expression. It's one thing to say, well, I'd just be ready along a level of support. We're catching up above a level of support with a degree of consistency. You bet it, aren't we? Without a doubt. What are you seeing going on? So that's noted. That's the second or third time that's occurred. I won't say there's a lack of pricing involved, but it seems like someone's privy to that level Someone is privy to that line here in the sand, and they're saying, "Why don't you play a little bit? Why don't you play a little aggressive with us while you're figuring out the market, Mister? There you go. While you're doing all this, why don't you figure this one out? Huh? We're gonna consistently require you to be aggressive up and over this specific level of support. Pick this up or this up, right? So we're very privy to." Privy, maybe not, guys. We're very plugged into Tesla. She will do this to you all day long, right? She'll just enjoy doing it. As we look at the action with throwback, right? With what's going on right now, what just traded? As you look at the price action, what just traded? Work on identification, breakout, boom, 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 back to preceding prior breakout level, engage for a trade. You got it. You're going to catch every move? No. If you trade enough on a lower time frame, you're going to start catching every move. You will have mornings. I say, you will have mornings where I want to see it, where you go decide to trade 5,000 trades, and in that time frame, try not to tell me, man, London, you won't believe this. I booked like 10 trades today in a row. Try it. Try and go through 5 or 10 1,000 trades, and tell me you're not going to have many days where you're booking 5 and 10 trades in a row, just right and left. Because as you see it and call it, and bam, you need to draw a pattern on your chart. Maybe not. So it's just volume, guys. Volume really speaks to consistency, and it's not. It doesn't have to be a drudgery. It would just be a drudgery if nothing were consistent, right? The one consistency that we see is value-oriented, typically value-oriented, and generally speaking, value-oriented participation with volatility is the name of the game. Meaning what? Meaning, first of all, you need to be ready for the 2 in 10. The 2 in 10 times that you will get hurt on a volatility play if you play it too heavily. Period. It's volatility. It's built for that. It's built to trap you in and get you excited at this level. It's built to reward the traders who see that as a pitfall, 5-alarm fire, and boom to the downside. And it's also built with, you got it, guys, in terms of pushing even lower, you got it, with some additional dynamics in play. Fortunately, and along that line, what was it? Yeah, we did see, and actually this was the push lower, wasn't it? The push lower on that hourly. Let's dig in and see exactly where we're at. First of all, let's reinforce the 4-hourly. The 4-hourly has been a level to contend with. 4-hourly time frame, hourly time frame, always literally on the map without a doubt. Let's take a look at in the specific move. Let's see. There we go. Let's take a look at the 15-minute preceding lateral, just picking up, along with the specific lower pro. We forget about the 15-minute. We don't mention it enough. We should mention it more. I don't know how to mention it necessarily more while we're literally digging through all the time frames, but the 15-minute time frame is it's kind of a hybrid. If we would just talk about a micro to maybe an open on the 3 or 5 minute, the 15-minute is just one of those that has got to be on your agenda. We agree. Let's take a look at the weekly very quickly, and then we'll schedule into exactly what we did hit. Looking at the weekly, we've got this triangulation. It's not perfectly formed. It's one of these triangulations we've really got to in terms of like a bull pennant. We've just got to really stretch this out and really expand this price action for this to look the way we really want it to look, right? But the weekly is a triangulation. We all agree? Yes. After what? After a move to the upside. I'm not crazy about having to draw this line all the way down to this, but you see, I mean, we would prefer this to get relatively a stronger move to the upside, right? With the dynamic and perspective in play from this particular, let's just say particularly structured symmetrical triangulation. We agree. Absolutely. So, but that is in play along with a bit of a lackluster or defective flag type formation. You're going to say, well, we have a bit of an expansion in terms of volatility. Yes, we just don't have that 1, 2, 3, 4, 5, we don't have it. We have a curl in 1, 2, 3, 4, and then, guys, would be a partial return up, out, and 5. But this is what we're looking at with the reinforcement on the specific, guys, the line today in the sand is holding below that specific cap line yet again on the weekly. So pay attention to such. Let's dig into trying to find that bottom line. We have to go to the 15-minute, or we get to go to the 15-minute to look at that 20 moving average that's trying to hold. Let's just look at the 20. Good review today of the micro time frames, descending triangle on top. And it's just tough, guys. You have to admit, if the market's going to be tough a little bit, it's going to be tough where? It's going to be tough if you've got an underlying position to the extent that you would operate in a hedge fashion. Okay, I can see that. If you're going to operate in a hedge fashion, this may come down more to style as you look at the hourly cap line trying to hold now. But as you're looking at a potential for a breakout, you tell me your style. As you look at a potential for a breakout, you got it. If you have an underlying position, yeah, you can definitely afford to roll a bit of some dice along the level of resistance and hammer in on some shorts, right, with a tight stop loss. You can do that. It's a sound approach. I would say potentially whether or not you've got an underlying carry position. But mentally, it's going to make it a little bit easier if you already have an underlying carry position that you could lock in profits on a hedge here, or you don't feel like you're about to miss out on a potential move to the upside, right? So if you've already got that underlying carry position, you're really in a position to operate a lot more rationally in the market in terms of just level of comfort as well. You can let your position ride a bit into the potential framework for a breakout, and you're not under the gun of having to establish a brand new position long. It's critically important. You guys agree? I would hope that you would agree on that one. It's a big deal. So lower positions govern here. In terms of the 4 hourly, you've had ample opportunity to engage multiple times on a critical larger time frame along the way here since this 4 hourly, and we have seen this consistently. So it's a no sad songs zone here in terms of, well, the opportunity to engage on even a cap line basis. Kernel, RSI, stochastic, and MACD basis has been there, okay, without a doubt. Was there on the way down, has been there on the way up. So it's not like we're overly complicating much at all, guys. It's staring at you. So that alleviates a little bit of this Johnny-come-latelys to the market, or to the move, wherein it's time to schedule in a big entry for a breakout. Get it underneath. Take the pressure away. Get it underneath. Let it ride. Let other traders get caught up in this with some bigger cash. Yeah, 100%. 100% of the time. That is a better approach than just trading a breakout. Who's beating you? What percentage of the people who own it here are going to beat you on a breakout trade? You hear me say it all the time. 100% of the people with a preceding position are going to beat you on a breakout trade. It's just the way the story goes. So we're going to start doing some macro momentum assessments as we look at momentum down. Currently on the 4 hourly down, currently on the 6 hourly, still on the uptick for the daily. We need to hold this on the daily. Noted was a big hit yesterday into the top pro line. Flyer nice, got it. So let's see what we got. Hope you guys are doing well this morning. Hope everything's going well. We are into the trade week, huh? What's up? Level of resistance, level of support. If the bulls wanted to really pull out something nice today that we could project into and say, let's watch this and see if the bulls really want this. If you've got an underlying position, congratulations. If you're operating on a 4 hourly time frame, congratulations. I have been encouraging you to do such over the last while, just at your own discretion, right? Let's see this. Let's just go ahead and do this. But you just understand how a lower position has really been nice this morning as you're looking at trying to break out. And if you're trying to negotiate larger cash positions on a micro time frame, just they're catchy, you know. But as you develop with your rapidity with which you can execute a trade, the specifics on your specific, let's say the tightness of your stop losses, as you develop into those and you're paying attention more quickly and you're able to construct in, let's just say more constructively move your larger capital positions in the market, which I know that you are, then we're good to go. Yeah, I hear good stories from you all. I hear good things from you all. Hey, it's a good group, tight group. That's the way we want it. That's it. Period. Period. What do we got here? Boom. Nice. Nicely done. Breakout with what? And we keep saying this, with what? Preceding. It's like, geez. I mean, Tesla is not Bitcoin, but she's acting like it. Isn't she? Almost, huh? She has her own characteristic set to her in terms of the way that she's choosing to interact with the traders. She loves to step out, up, and over a nested, I'm going to call this a nested or included flat top resistance with a breakout pattern. And what? We still have these quote unquote hurdles to the left. So that's what you've got to mind on, you've got to mind that on Tesla. True? Yes. You do have to mind that on Tesla. You got to be a little bit careful. It's the way she operates. Stepping up through flat top resistance bulls coming into the picture, nearly perfect inverse head and shoulders. And she's, talking to you a little bit, isn't she? She's like, you remember this inverse head and shoulders on the 15-minute. As we go back to that lower time frame on the 15-second, you just see these are picture perfect patterns. True picture perfect patterns, aren't they? And you start getting an appreciation. It's like, okay, fine. I know we have a volatility expression out through, let's just call it out through here. Let me get back into this. Where's our volatility expression? We want to know, right? As you look at this, it's like, hold on, what good is this doing me? That's a volatility expression? Yeah, that's not the kind of volatility I want to play. Yeah. You need to gauge how compact these volatility expressions are. You understand. And when we start to push sideways in one, or we start to go down the middle of the road on one, it's just, what do we like? We like that level of resistance to be up and around the zone. Yes. We like to have a level of resistance to recover to. It doesn't have to be flat. We don't want it flat. We'll take close to flat. Why? Because then that recovery line is higher with some very nice probabilities included. You got it right. That's a good thing. Okay, so noted. Nothing too crazy going on with Tesla backing off that macro level of resistance. Bulls mustering up the courage, saying, are we going to do this or not, guys? It's a big deal. It's a big deal. It's a big move. So bulls heading back into enemy territory, right? Bears on the other side of this line. You got it right. It's a great potential move. We got some additional obstacles to the upside. Where's our real breakout? You got it right. Let's just view this as another potential incoming hurdle in around that, what do we call that, 275? Yep. But you just see, that's what we want. So let's take that micro feature, that tendency of Tesla to operate in terms of flat top resistance, up, out, and over, nested with the preceding pivot here to the left, those lateral pivots also in play. And you may just say, well, let's take a look. Sometimes I'm going to admit one of the best features will be a head and shoulders drawing. As you're looking at left shoulder, the best thing this is going to do is give you a solid neckline. Yeah? Those can be a little difficult to make out. You're going to have to take the pivots between the head and the two shoulders. Really, you're going to have to get good at identifying this line visually. Okay? So, just note such. If you need to see that on the screen, no worries. If you need to see targets to the upside based on this, no worries. I understand you have a variable level of completion to the upside. And this is going to be a conservative approach. This is going to be more conservative of a drawing rather than just the specific curvature and handle here. Why? Because your curvature and handle, well, we're going to have to measure the difference between the neckline and this pivot. It's going to be determined by the difference between the neckline and this pivot, okay, and the potential lower neckline feature here and your pivot. It's a micro consideration, but there is a difference because you're operating on a neckline basis and a breakout basis on your inverse head and shoulders versus operating on a specific breakout of the pivot on the designation construction of any kind of a curvature and handle. Or we could even say a lateral inverse head and shoulders. Does it matter if you look at this as a curvature and handle versus a lateral based neckline curvature and handle? No. Will you have different probabilities in terms of a return to neckline, etc.? Marginal. We can discuss those. You might have better data. I will admit you might have better performance data on a curvature and handle, which is why I would continually point you at such, right? As we look at a curvature and handle, I want to point you to those because they have great performance data. They're some of the best patterns in the market. I want you in that mindset when you're trading them. When you read about them, I'd prefer to direct you to a curvature and handle 8 days a week. It puts you in the right mindset. On breakout, we've got something to trade. Inverse head and shoulders get a little bit variable commentary. Yes, it's one of the most prominent patterns, the biggest reversal pattern. Yes, but we just have some inconsistency in terms of how the technicals operate around such, right? What the performance expectations are, whereas just as presented to us, the curvature and handles are, they're just a little more exciting to read about and to know that you're involved in a trade rather than a head and shoulders. And I just say sometimes Bitcoin is miserable with head and shoulders. True? Man. So to the extent that we're also a little gun shy of head and shoulders, they trade well on, they seem to trade relatively well the last 24 hours on Bitcoin. Okay, let's give her some credit here. They've traded relatively well in the last 24 hours on Bitcoin. True? Yes, you couldn't miss this one with anything, guys. That was a very, very well conscripted head and shoulders that played out on that 8-hourly time frame. That's a mean looking head and shoulders. Nicely done with that confluent descending triangulation that we noted yesterday. They traded very, very well. So congrats to everybody who traded that. A little bit of catchy price action on the breakout, given the fact, or on the open, given the fact that we are along a potential breakout on the macro on Tesla. Again, this is one of those days you could just trade Tesla all day long. I'm telling you guys, this is one of those days. It's an exciting, there's a good dynamic in play here. This is just it. If you like the markets, you're going to be plugged into this stuff. I don't see how you can miss this stuff if you like the markets. I mean, and the dynamic, the overlay with Tesla being at a critical level in a breakout with Bitcoin being at a critical level, this 200 weekly moving average, given the overlay function with NVDA. I mean, come on, how can you not be excited about Bitcoin with NVIDIA and Tesla? It's like we're looking at the same charts. It's nice. We got a flat bottom support, ascending line of resistance on NVIDIA. We got the same thing on Bitcoin. Yeah. So we have a clear overlay, Bitcoin and NVIDIA. Hey, can we get some good news on Bitcoin? I mean, this is it. And we have the perfect, just the perfect storm of correlative rationale for us to dig into Tesla. Why? Because Tesla's at a big breakout potential move. I'm going to go over this again. And Tesla's at the point it's about to break out. We got to break out. Now you scream it, huh? We got to break out, right? So, but looking at it, as you look at that critical feature, in terms of a potential breakout, what's the point? The point is we have a critical level that we need to break out up and over. On the macro, it's a big level. We got to bust through that. It's going to hold or we're going to bust through it. And so how does that schedule up with Bitcoin? Well, Bitcoin's at the 200 weekly, right? So we got the excitement on the front of Tesla being at the precipice of breakout. We have Bitcoin locked into an equal battle on the 200 weekly. Yes, we have NVDA and Bitcoin in a literal overlay in terms of their pattern construction. This is good stuff. These are the market guys. NVIDIA is a market leader. Tesla, guys, King Kong of product development right now. They're doing awesome. This is good stuff. Bitcoin currency future. Huh? This is good stuff, guys. It's good stuff. I mean, NVIDIA is practically running you can look at it the way you want to, but graphics processors in terms of the function of Bitcoin, highly relevant, right? They got the ant miners, etc., but it's relevant. You want to deal with Bitcoin? The Bitcoin crowd's flush with graphics card potential, right? So that is an exciting dynamic as we look across just dynamically at the specific assets that we are choosing daily to dig into. That's good stuff. That's good stuff, guys. Let's take a look at guys, we're looking at almost 2% on NVIDIA. So NVIDIA is kind of taking we're going to have a level of anticipated interaction up and around this 23.6. It's on the map. All right. Be aware of the fact we are breaking out. What happens on breakouts? Well, we know a lot of people that tend to stack orders below. Fact? Yes. Required to revisit? No. Likely probability? You tell me what the percentage probabilities are based upon the empirical data that we see, or the actual data that we see, right? Differentiated head and shoulders, you bet it. How many necklines do we have? There's one neckline here. There's another neckline here. You got it. So with the complication of the rising wedge, not a favorite place to enter at all. Just not a favorite place to enter up and over a rising wedge, but nice to see it engage. Nice to see some action. Give it a run. You can't discount the fact that this is a difficult move up, out, and over. It just is, based on the probabilities. Look at the last 40 years. You backtest the last 40 years. Let me know if you agree or disagree. All right. All right. So Tesla trying to regain a little bit of steam. You guys know the level on Tesla for breakout. What is NVIDIA doing? NVIDIA, you are really, really going to bust it up. You're going to, yeah, I guess on the weekly, we're going to be paying attention to the line that is going to engage or not again. As I talk about the 23.6, do you think we've got a potential issue here with an ice cold short on the weekly? I don't know. What do you guys think? An ice cold short on the weekly. She's going to make you hold it. That's the thing. We call them ice cold shorts because the notion is, in terms of the calculations, it's high. Okay, it's high on the weekly. This is high. Now, granted, this was the largest move in terms of market cap overnight, I think in the last like 3 or 4 decades in equities. So, yes, it has the potential to rebound and restructure quite aggressively, as we've seen, pushing up into the 4-hourly level of engagement, top band. 4-hourly, engaging, you got it. Boom. Looking at let's see what we got. Where are we at? Just kind of slowing down. It's about an hour and a half into the open. Just feels like we have some important dynamics ongoing in the market right now. We need to look at NASDAQ. We need to look at the NASDAQ. Let's take a look at what we've got going on here with Tesla. Come back over here. I think I drew into the micro on, let's see the specifics here. Let me go back into this micro chart framework that I had pulled into. Golden pocket hit, nicely done. Golden pocket hit on, let me see where we're at. golden pocket hit on into drawing in the 15-second, seeing the golden pocket hit, and you just got, orders parked below without a doubt. Without a doubt. It doesn't go without saying though, guys, because a lot of people aren't going to try and park orders anywhere. A lot of people are not going to try and get any value. A lot of people are just going to trade a breakout. That has got to be the most dangerous approach that I know of in the market. It's not unfounded, it's just dangerous nonetheless. It just is. As you look at the functionals of guys, if you have the patience to just trade the breakout and a tight command over your technicals, it can be very profitable. It can be very good. But with that said, it can also be very dangerous. It can be very difficult for people who put all their hopes, pin their hopes and dreams on one move. And it's got to be directional. And they're going to hold on to that one move. You guys know that. I'm interested in the following. As I look at a volatility expression in the market, I want to trade something. Please pay attention to this comment. I want to trade something consistently that does what? You got to already know what I'm going to say. That consistently is going to, consistently, if and when we break a volatility expression to the downside, based upon my pickup here. Yep. This is a big, big deal. You want to pay attention to this big time, please. As you're looking at a volatility expression, it's the number one performing pattern in the market in terms of probabilities, so pay attention to it. As you're looking at them, I want to know what percentage of the time on a big rifle down here, bam, how many times with what percentage probability am I going to recover to this entry spot here? If I push sideways, if we go wild in terms of some unpredictable price action, with what percentage of frequency am I going to recover this if we start to plug on down and below? What level of comfort should I have based upon the back testing? Okay. What level of comfort can I sit there and relax and be like, man, 80% of the time or 90% of the time, you guys go sweat it out. I have a position right here. If I can get further down, I'm fine. Perfect. And knowing how your asset's going to behave and knowing that you're going to get a recoup here, literally 80 to 90% of the time, is a game changer. Some people are going to do this and make it look easy. It's by knowing your data. It's by knowing your targets, knowing your interaction underneath. Let's just say the behavior, your levels of interaction underneath, for instance, descending triangles, specific to assets, specific to time frames, etc. Let me move this back over here. Let's say Tesla. Knowing your proclivity to return to a flat top resistance, right? That chart is, let me try and clean that up. It's a prototype. I'll put it on another screen. In terms of the design build out, you'll see something interesting there relatively soon. Hopefully more interesting, but it's getting interesting. It's getting interesting. 4-hour standard deviation on Tesla. Let's walk through. Let me see if I have Tesla up here. Yeah, let me clean this up real quickly so we can take a look at cross time frame based on our multi-time frame interactive here. Let's take a look at the 4-hour, 6-hour standard deviation engagement. It's easy to see now, isn't it? Let me go ahead and zoom this in so you can see. 4-hour, 6-hour standard deviation. Boom, 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 boom. Nicely done. Reinforcement along the capital control line. You see the capital control line now? That's a nice look, guys. That is the channel that's been established. Word. Nicely done. And I have, let's see what I've got here. A little bit of an overlap. Looks like the 8-hourly, they're tight. Let me see. I have to do this daily and the 8-hourly. What daily is going to be the 8-hourly? Let me take this 8-hourly off real quickly. 1 second here. Let me take this 8-hourly. Where's the 8-hourly? It didn't give it to me. It just gave me the daily. Let me get the, I'm going to have to do this. We have in a prototype, just understand, in a prototype dev work environment, we have differences for crypto. We have differences for equities. And as I try and apply them and keep them relevant across the board, we wind up having to dig in and make small adjustments. It's not, I mean, to make something that's cross-asset, we may trade, guys, something just purely crypto, and we may have an interest in assessing for purposes of back testing and probability work. So we want to look at the last 40 years of the Dow, or some market data that may lay over with Bulkowski well or something along those lines. So we get into some additional some additional refinements that are cross asset class, of course. Level of resistance, this is the level in play. The weekly is showing me that on the weekly we have something to look at. Let's take a look at that 4 hour. Let's take a look at Tesla on that weekly. And on the cross under back over, we know one thing. We know one thing in a bull run. In a bull run, the specific 20 moving average should be used as a level of reinforcement to ricochet and provide activity back up and through to that top side band typically. Typically, it'll happen on the daily, happen on the weekly, right? That's a dynamic in play that we have discussed frequently. So in terms of that, just pay attention there too. Looking at the micro consideration versus macro consideration, as we were to look at the specifics in play, remember this larger question as we were to look at the hourly. If we were to really script out what the specific bull march would look like, would be an up, out, and over a bull pennant, right? So as we look at the volatility expression today, we talk about a bull pennant construction frequently, don't we? We do. We talk about a bull pennant construction. We need to get aggressively to the upside, to the downside, to the upside, to the down, bam, 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 quick ricochet. You got that right. In terms of the construction of a bull pennant, this is what we want to see either on the pennant or on the specific bull flag. We want to see bull handoff to the bears, straight back to the bulls, straight back to the bears, bulls. 1, 2, 3, 4, 5, 6, boom, over and out. Like is that volatility expression in terms of the periodicity of it? We want it to occur quickly. That's it. The frequency needs to occur. These transitions between resistance and support need to occur quickly. Bottom line. So we've seen that dynamic here. Just be aware that we're along a level of resistance. It's a good thing. It's an exciting thing. Pay attention to this upside hurdle. And it's going to be a phenomenal move. I'm going to tell you guys, we have the potential for a phenomenal move in NVDA. Just accept this fact. Accept the fact. This would be a spectacular move. Bam. You better believe it. In terms of the macro for NVIDIA, just to play, guys, along with the technical framework on the macro, for that to work out, boom, it's going to be spectacular. Weekly buy line caught the interest here in terms of VLO, boom, green buy line. Nicely done. We would have loved to have gotten lower, of course, but we did catch the indicator speaks for itself, so nicely done. Now, 15-minute in play, where on a video, yeah, cap line noted, keep an eye on that, and standard deviation, upline standard deviation. So as we look at the potentials here on the macro, bam, would be a spectacular move. On Tesla, we are looking at another potentially spectacular move. Look at this. This would be a spectacular, this could be a spectacular move. If the bulls are going to try and look at this, we're going to try and formulate an inverse head and shoulders. This is a potentially huge move. We'll take it up to the level of resistance, no problem. What would the percentage gain be here? Just to the level of resistance target, 35% move. Tesla has gotten up and out quite well. So there are some exciting patterns that are on the map immediately, right? Let's notice this level of resistance here. This would be a great moment for Tesla. Looking at the specifics here, we may want a deeper right shoulder. I hate to say that. We still have it here with the left shoulder, the head, and the right shoulder. It's enough. It's a little bit light on the right side. You agree? But this will be a really big potential move. You got it. So let's appreciate the fact that we're looking at potentially big moves. On Tesla, on I'm at the 15, 30, let's go to the 15. On Tesla, on NVDA, without a doubt. So as we formulate the need for the breakout, reinforce your lines that need to hold in terms of cap line, 1 hourly, that's been in play. In terms of any downside, I want to know what's downside from there on the 4 hourly, right? Walk it up. Cap line on the 4 hourly below. Note that level of interest along with and walk up. Essentially, where you would be walking down your additional levels of interest on your higher time frames, of course. Looking at, just understand the magnitude of what we could be looking at if and to the extent we get the breakout on a basis of momentum. We need to pick up on the 4 hourly. On the 4 hourly, we don't want to roll over on the 4 hourly on momentum. We just don't really want to do that. Okay, on Tesla. Momentum looks relatively clear on the 15, on the 5 minute, what is this? Let's go to 5 minute, 15 minutes, and the hourly. 4 hourly, 6 hourly, problematic. Daily still looking good. Daily needs to hold and bring back around the 4 hourly. So it could be a little bit of a difficult day. I think we can agree with that. So bulls failed on the initial push up, out, and over. And on the 15 minute, let's go ahead and draw two formulated patterns for you to consider as we look at this. Let's draw the specific bull flag potential here. We have the 20 moving average and the cap line incoming in terms of a level of reinforcement. That's going to coincide well with that hourly cap line. We know that. We just looked at that. And just notice that we've got a bit of an elongated here curl-in feature up and over into something that's trying to express itself as a triangulation. Not necessarily in line with, I'd say, standard ideal technicals. However, it is becoming somewhat expressive of the nature of Tesla to roll in and around like this. We have several patterns on several time frames that are indicative of this roll-in, kind of extended line roll-in feature even on the daily, right? So we're getting that. We're really at a fractal of a compression of a larger time frame, of a compression of a mid-level kind of time frame. We're really constricting in as we look at this potential breakout on Tesla. The bottom line is it's best to have a lower level entry. As we look at the dynamics here, retesting this level is not going to be necessarily comfortable, though we should expect orders to engage at this level of the preceding midline. As we were to look at this temperature and handle feature, we should expect that, as has already occurred for a hit this morning, we would see additional orders at this preceding pivot and at that breakout level. Orders are parked. Is there enough pressure right now for the bulls to power up, or are we going to need to see those levels engage? I know you as traders in this group have orders here. So the question is going to be, as we roll into the mid-morning and afternoon, it's going to be, at least the mid-morning right now, do we have enough pressure now to push up in this pattern framework? Or are you going to need to hit down into this preceding flat top or preceding pivot, lateral pivot, in terms of that breakout, which is already traded once nicely? Do we have the pressure to where we can justify the market, even say the market maker saying, fine, we have enough orders in, we got enough participants, let's go ahead and raise the price, let them make some money. We don't think about things in that regard frequently enough, do we? Like, there's enough people involved in the dang thing. We got enough people involved in Tesla. Let's go ahead and just raise it up. If they don't, they may need to recruit some more bulls, right? And if they don't, they may need to recruit some more bulls. You got it. So it sounds a little bit more straightforward maybe than how we put it most of the time with all the complications, all the indicators. But is the demand there? Do we have the demand there? The pressure to push this on up. We're at a level of support nearly immediately, right? As we look at that specific line, it's just one of those days you could trade Tesla all day long. I'm just going to tell you guys, it's one of those days. It is one of those days. Let's take a look at NVIDIA, back down onto the 3 minute, trying to hold that 20 moving average, lower pro line, NVIDIA trading. Taking a look at NVIDIA is going to be in an uncomfortable position until NVIDIA decides to really buck the probabilities and operate up and over a rising wedge and really complete through the inverse head and shoulders. Okay, so let's as accommodatingly as we can, let's go ahead and draw this in so that we understand, given the dynamic of the rising wedge, which is not a bullish, is not a bull favorite in terms of a breakout. Let's just draw this as positively as we can for the bulls. Let's draw this as positively as we can for the bulls. Keep that inverse head and shoulders rocking and rolling until otherwise. And let's look for the 481.97. 481.97. Man, that's not that high. Man, 481.97. Huh? That's just not that high. Come on, NVIDIA. 481.97. Well, we just have to remember that's not that high. Let's see what we got. That's 4% away. All right, well, anyway. We'll have to look at this as a reinforcement while we deal with this headache of a rising wedge. Do not forget it can be a headache, okay? If I just take this off the screen, everybody's happy. Huh? Everybody's happy. And we can really justify doing this. Let's do this. Huh? Let's get a little more bullish on this. Let's do this. Why? Essentially, we're going to be pointing back at the neckline of the inverse head and shoulders. So instead of having red all over the screen, let's just do this and let's understand that, well, it's just going to be a re-hit on the specific neckline. Let's just chill out. Let's give this some credit here. And the last number of days, the last couple of weeks here, let's give this some credit and let's see what the bulls want to do with an inverse head and shoulders. Forget about the rising wedge. All right, because our apex is going to be what? It's going to be this line. The preceding neckline, guys, or the breakout, this is a small curling feature. It's not necessarily a throwback. It's a small confirmation. So let's just give it to the bulls. Let's see what the bulls want to do with this breakout. Let's forget about it. Just, when you look at it again, you're like, hold on. We got this level here. You're just going to do that. So as much as you want to wipe that off the chart when you trade a lot, and I know if you trade a lot, you're like, I know, but you see this right here, and like, yeah, I see that. Okay. Yeah. You want to draw this back here? Yeah, just so people know. These aren't, you're just going to do that. If you trade a lot, you're just going to know that. We don't like to trade these breakouts bullish with a rising wedge feature. It's just the construction, part of the demand agreement. Bulls on support, bears on resistance. It is not favored. But let's see if we can forget about it somehow. If we can forget about it, if NVIDIA can produce well enough and we say, man, do you remember how concerned we were about that rising wedge? Let's see. Let's go, bulls. What do you got? You're up, out, and over. Nicely done. Okay. You met our threshold for breakout. We've been interested in you for a while, NVIDIA. We have been watching you for a while. True? I don't know, guys. What do you think? I'm going to bring up our 4 hourly. We have been watching you for a while, NVIDIA. Yes. We've been watching you for a while, for about 2 weeks. Be in a bull zone for us, right? Yes, indeed. So, let's see what we got. What do we got? Trying to hold on the 15-minute. Let's take a look at, does that pick up here? Yeah, nice cap line feature on the 15-minute again, right? Nice direct line pickup on the 15-minute. This trades. Let's see what this does. About 0.2 trades. Nice. Nicely done. Flash trades. So this is a good moment, good day for NVIDIA. We need that momentum. 4 hourly, we need you. We need you to pick up the pace here on that momentum, without a doubt. It's one of those deals. Look at that hourly, try and pick up again and pop just a bit on that specific cap line on Tesla. So the market is in a state of needing just some catalyst action to pick up and get busy. We've been going in a good direction, but we haven't really gotten busy on some larger breakouts. This could be good. I'm just going to tell you, this could be good. Don't get overly excited, but it could. It has the potential to be, guys, this has the potential to be a defining move in the market on Tesla. Indeed, a defining move. Breakout required? Yes. A defining move that at 100% would get us up and over preceding all-time high. 489 sounds good. I will tell you that it would be very interesting to hit this top line of resistance at some point, we would like to accomplish that more quickly rather than lately, rather than later, right? More quickly rather than later, because it's a great level to hit and to revisit a moment down here in this section and be like, can you believe that we were down in this zone? Now that would be a colossal move. But the longer that we spend under here, the higher that target gets, right? So as I look at the markets, I want you to understand that's what I'm looking at. On every chart I look at, I'm looking at a top line resistance. That's just how bullishly constructed I personally am in terms of my assessment in the market. I want to know how to get back to that top line resistance, how I can push that top line resistance up in the formation of this pattern. Really I'm very interested in pushing this level of resistance up while we're forming this level of resistance. I want to push this line up. I want to create a higher level of expectation in terms of any return to that level. That's a critical level of resistance for me to try and be a part of and help push this up so that we have a higher overall threshold to potentially meet in the market. You got it. That's just the way that I operate. So good morning, good open. I'm going to encourage you to pay attention to to the fact that this morning the bulls had a chance to get out, up and over. And again, it would be a huge move. Entries yesterday paid to the extent preceding preceding breakout pivot did pay to the upside. We'd like to stay off of this to the extent possible. That line again looks like Bitcoin heading to the downside. Let's go ahead and schedule in a Bitcoin real quickly and take a look at where she's going. What do we have here? Let's see where we're headed. Flat bottom support, descending line of resistance, triangulation. Okay, in terms of the descending triangle framework of Bitcoin to the downside, 38.2 looking to engage. And again, on this volatility expression, we were not excited about this on the downside, particularly or especially because of essentially the angle of recovery here. We discussed this yesterday, level of support here. So to the extent that you are in a short and doing well on it, congratulations. Did you enter short south of the 200 weekly? I hope so. If you did, that's 4.5% now. Very nicely done in a short number of days here. That is my line in the sand. Short under, guys, short or bearish under and bullish over. That's just the bottom line, and I will stick by that for a number of weeks based upon the preceding, on the entirety of the back testing and the duration for Bitcoin. Let's pay attention to that 4 hourly, without a doubt, as we look at what's holding on Bitcoin, the green buy line on the 4 hourly. It's a tough level to just knock through. You know that. It's a tough level to power down through. And you can draw your descending triangle on any time frame. Again, where's it best to own a short at this level? Go to your 4 hourly again. It parked you perfectly. Your cap line parked you perfectly. Literally was your perfect entry, near perfect entry at that 200 weekly. True? Fact. Nicely done. You betcha. I appreciate everyone who made these trades possible, period, in the market. You guys specifically and anywhere externally in the market who has oversight function in terms of the quality technicals and calculations that should apply to the markets. I mean that sincerely, because that's a nice representation of a good move in the market. It's technically sound and calculated to such that it can be nearly to the extent that something could be formally relied upon in, we could say, certain domains that are particularly and especially even outside the purview of the market or the context of the market. Right? I think that's well stated. 4 hourly green buy line trying to engage. It typically does. It already has this morning for money. Looking at the for profit. Looking at the daily. That's a nice look. Huh? We agree? Indeed. We agree. It's a nice look. That's our line. You got it right. That's our line. We know this. I really got it. 200 weekly. Got it. A little bit of pressure falling out of Bitcoin. We've been waiting for the move for a while, so it's nice to see it. You're on a level of support on Tesla. You just are, huh? Just on a level of support. Precedingly, pick up and flash back down nearly to that level here, huh? The preceding, we're testing that. That's a little bit bothersome, isn't it? This is not a comfortable day for the Bulls. I got to tell you, it's just you see that, it's like, oh, come on, because the Bulls, you guys understand the flat bottom supports. We don't want a flat bottom support. You know that. It's like, man, you guys don't want to push this thing up. We got a huge breakout. We got a huge pattern in play. You want to sit there and you park underneath, and you'll do it, and you've done it, and you've sat there, and how many times have you gotten you sit there and ring the bell, boom, boom, boom. But when you're just going to sit there, they're going to give you so many hits and bites at the apple here. It's like, here you go, bam. And one more time, you have to have it one more time, huh? And you're a bull and you have an underlying interest. This is where you shoot yourself in the foot. You have an underlying interest and you're trying to push up, out, and over. You got to get it done, right? We're breaking out. And you're doing what? And you're parking at a preceding. The level of consistency that you're looking for can just be really damaging towards your overall. It just is a fact, all right? So you have to understand that dynamic and appreciate it. As you look at this preceding, just we got to hammer in. This is our line. It's our line in the sand. The Bulls are saying while you're building out, potential descending triangles all over the map. Granted, you get more interested underneath a descending triangle. Yeah, so the Bulls have an ace up their sleeve. Yeah, throw us a descending triangle. On the right asset, we'll take it. So Bulls holding on to a level of support on the 5-minute. And a little tongue-in-cheek here, as you would look at it, is like, the Bulls are so powerful. They're just staying at a specific, they're parked at a price. They're not driving price. They're parked at a price. We excuse it a little bit because it's a prior pivot. We excuse it just a little bit. But we are cognizant of the dynamic, without a doubt. Without a doubt. You can't tell me there are no trades. There are trades. If you want something directionally to go exactly as you plan it for the next number of, and it gets progressively more difficult from the minutes to the hours to the days to the weeks to the months to the years. It can get progressively more difficult to, with a level of refinement and detail, predict all of those moves. Within the next few seconds, it's pretty easy, right? Sometimes the patterning allows us on those larger time frames to be predictive, but then it becomes more of a scale of a profit equation that we have to look at, levels of exposure. So we like the quick hits. You know this. Let me check in the chats here real quickly, see what we got. Good morning, London and BIP. Great weekly ice cold short NVDA side trade. Every hit has printed. Look at that. What's up, Venus? Venus, way to go. QKD, best indicator on the market. You got it. Daily Pro on BTC. Perfect. You got it. Check out Blackjack. Add on indicator on the 3-minute. Told VIP to add to shorts right before the second drop. Oh, well, that is experimental. You have entered into the experimental zone. Welcome to the experimental zone, Venus. It's not necessarily experimental. It's a different approach. It's not experimental, but it, for purposes of Venus. Good morning, Venus. I gotta say, good morning. Boom. Nice trade. You can tell someone's plugged into the market, huh? She has more than one screen up. You guys know this. Very important. Good morning, Venus. Nice to see you. I'm going to type in here real quickly. I hope all of you are doing well. 2023 shaping up. Huh? Shaping up. We got Q4 in the house. We got Q4 incoming. These particular moves would assist in Q4. But let's not get overly anxious. Huh? Not a bad approach. Let's not get overly anxious in terms of the fourth quarter. We're into it, but we don't have to get it all now. We don't have to get it all today. What's paying on breakouts? Well, the well-structured and disciplined trader who decides to come back down and place at the level of preceding resistance, said the old wise man, huh? Yes. We're also seeing lateral pickups pay. Yes, we are. We're noting these. When the market likes to get rambunctious and just go up, 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 up. A nice opportunity to review some micro technicals in the framework of your entries at breakout. We could almost say don't enter at a breakout high. That's easy to say, right? Because you need momentum. But you need the momentum, but can you wait for even a pullback on a breakout that can potentially even move with a stop loss then that could potentially even move let's dress this up the right way in terms of the specifics on the descending triangle. Can you get any kind of a consideration here? First of all, it's tough with blackjack here on this specific blackjack move. We had some overall indications on some differentiated time frames, but as we look at the specifics here, she's pulling an NVDA. You know this? She's pulling an NVDA right now with no return to prior flat bottom support. You got it. She's pulling an NVDA. NVIDIA did this last week, right? Big time. Let me get a little bit more focused. Okay. All right. Over performance. Let me see on, nice to see that you are just hammering into the technicals and enjoying the layouts right now. And guys, blackjack isn't a point. It's just, I'm going to say experimental. You understand what it is, but to encapsulate a flat bottom support or flat top resistance and to return there too within the dynamics of it just requires some testing. You guys know with machine learning, we just got in through a lot of that. We have some additional dev work ongoing with machine learning to incorporate on balance volume and one more level there that's going to be incorporated soon. So on balance volume, you'll have that as a key threshold as we look at Tesla on the 5 second. Bit of a bearish flag could also be a construction element thereof. Noted as we're trying to hold this level and stay off of this level, right? Essentially is what we're trying to do. We're trying to stay off of, and what do you see here? You got it. Just 10 times out of 10, the number one thing to pay attention to is going to be the extent to which we can put this into the expanding volatility, okay? Why? Because it will encourage you to participate at lower levels along support. It's not the only place that you can participate. Right, as you go in and look at your squared up, let's hit this right in the jaw. Bam. Okay. And then what do we just have? A re-hit down to preceding level of resistance. Gotcha. How many times has this played today in the market? Over and over and over again, essentially, right? We've seen that multiple times in the market. These are tight moves, 0.1%, right? But this structures you to the downside in a very important way. We are a little bit cautious given the fact that we have been testing this line. Does it mean that traders won't engage? No, trades are there. Trades have been there 1, 2, 3, 4 times. So the fact of the matter is we have a really potentially huge, we're going to call it a huge move, guys, on Tesla, right? What do we got? Top notch. Hey, yo, what's up, Scotland? Nice to see you. Nice to see you. When I talk about the profit equation, as you all determine your level of involvement in the markets, you are increasingly, as you look at your specific level of exposure, you're looking at the profit equation. That's it. It's not a question, really, as you start to look at things. I mean, we're going to point a line out. Somewhere along the way. We're going to point a line out somewhere that's going to be reactive. Okay? It's just a matter of, we can't take away the technical dynamics of price action. We just can't. We could try. You have to have an illiquid market. There are conditions under which it could occur, but given that fact, you deal with your level of exposure, right? And you start to formulate the equation with your level of exposure, calculating in issues such as risk, et cetera, probabilities, of course. But you get into the profit equation. You personally calculate and compute as you are framing your involvement into an asset, right? If you want to buy and hold Berkshire Hathaway, hey, it was a good idea way back when, right? I don't know about now. You have to, some people have to sell their car to buy, Berkshire Hathaway stock. Okay. But as you were to look at the dynamics, particularly of crypto, which is a little more off the cuff, a little bit faster action, right? Volatile, not regulated, fun, Wild West style. But we're going to have moments where we have a reactive, we have something dictating, okay, over bullish, under bearish. First of all, you have to negotiate your position. The volatility along said line is going to present some risk depending upon your ability to operate at the lower time frames, as we just did on Tesla, right? But we got a good indication, really arguably on both of these. And as you start to say, well, where's the answer? That 4 hourly starts to just be like, we refer to that so frequently. You know this. We refer to that 4 hourly so frequently, don't we? Big time. Just pay attention to it. Preceding pivot, you barely want to say it, right? Lateral. You just, it's like, come on, move. Because you're parked in a short, right? You're parked in a short. What played pretty well here? Flat bottom support near, really back to this specific pivot. We had about a flat bottom, working on the dynamics in terms of the overall drawing here, but that flat bottom support did recoup back to that level, which is not exactly, you give us some credit, it's not exactly a flat bottom support there. But that level kickback reaction, we had shorts parked. Boom. Nice moves. Nice moves. Let's take a look at, I'll do it now. Huh? Right as I give it the credit. Huh? Right as I give NVIDIA the credit. I did take away this is my other chart. Huh? This is my backup chart. Just in case you were wondering. Huh? Isn't that convenient of me? Huh? A little bit sly. Huh? I wonder why I like trading. Huh? The challenge of the market and they're going to outdo me. Huh? Okay, fine. But right as I give the credit to, it's good. Right as I give the credit, it's worth talking about. It's technically there, okay? As I give credit, okay, let's just take away that rising wedge. What do we have on the backup chart? Well, we have another rising wedge, right? So, what do we have? What else do we have? Well, we have another rising wedge. So the point is, as we look at this, we've got some opportunities for the bulls to really, it's just funny. You guys admit it's kind of funny. It's like, well, trying to be bullish. Now, what do we have though also? Let's, to everyone's credit, that specific cuppage and handle feature played well. We do have a little bit of a light right shoulder. Yeah. So we understand the cards that are against us in this deck. Hey, no problem. No problem. But you got a few extras that we didn't talk about. Just to note it, just for purposes of completion here, we do have a few additional cards that we really haven't discussed. This one we're willing to say, fine, let the casino keep that card. We're going to throw that card off the table. Casino's going to say, yeah, but we got this one too. We got this one too. You're like, oh, fine. Huh? What are you just going to throw it back in my face? We got this one too. So, the casinos, the house here in terms of the market makers are kind of talking to you. With that said, who has an opportunity to reinforce? Somewhat analogous as we look at a prior pivot to the left somewhat on Bitcoin to an extent. We notice when we have a strong correlation, right, in terms of pattern differential or critical level like the 200 on BTC, vis-a-vis that strong breakout potential level on Tesla, right? And then the clear layup on the patterns with NVIDIA and Bitcoin. Taking a look at the opportunity to re-engage at this level, we're going to take a look at Tesla, and the opportunity to re-engage at this level, okay? So not a bad look on the 4 hourly, we'll agree. And what's right at that level? Couldn't be much better, huh? Couldn't be too much better. Parked a little bit south there of this line, this prior pivot. But we do have, as an established level of interest, we have this capital control line, right? RSI stochastic MACD kernel thereof, okay? So we're seeing the flex back down into a level that we expect to hit. We expect interaction. It's been a great level to hit and has provided great interaction. So while it seems that the bulls don't want it, the line of control, really that capital control line is this line. That's the RSI stochastic MACD kernel. That's the controlling line right now that the bulls are operating upon. So let me go ahead and put it on here. We got a shout out to Scotland. What's up going on, or what's up in Scotland? I hope all is well. Let me put that in the chat. What's up? Good morning. Boom. There we go. VIP are trading. You guys got your picture in the top right. Hello to each and every one of you. Down under, wherever you guys are at. Scotland, Good old US of A. Hey. Now we're seeing a momentum shift on the 4 hourly. This red dot here means a momentum shift on the 4 hourly. Yep. See how nicely the momentum carried us up? I've got this blue line differential. That's the momentum positively. Bam. Look at the time frames here. This is a positive or negative momentum. Red is bearish right now on Tesla. Lower time frames all bearish. Still holding on to that daily, it looks like. Still holding on to that daily momentum. Yeah, that daily momentum is still holding. But you're seeing the momentum on the right-hand side. Okay, that's important. That is important for you to note that we do turn red, we go red, we go red. Seeing that as well on, and it's just important for you to be able to identify without having to do the technical assessment on all the time frames and say, okay, great, we're looking at, take a look at the hourly on NVIDIA. Take a look at the, on Bitcoin. Where is my table? Where is my table on Bitcoin? Let me pull this over real quickly. Let me see if we have, let me click back over to the hourly on Bitcoin, and I'll let you know the time frames in terms of momentum. We got some good plans. I want to let you guys know we got some good plans. It's going to be nice. You think this is instrumental? This is nice, huh? To have your specific, look at your momentum on all your time frames on Bitcoin. That's your momentum. Boom. Nice level of confirmation. Yes, indeed. Look at that. You got your monthly headed to the upside. Everything else is just down. Big time. Nice to see it, huh? Nice to see a level of confirmation. While the NASDAQ is still green for the day. I like this hit, guys. I like this hit. In terms of that 200 weekly, congratulations to everybody who traded this short, under. That's perfect, huh? Nice trade. Boom, boom. Now, we'd like it to run. And here will be the problem. Here's the fly in the ointment. You are short Bitcoin. I assume you're in the money. You don't have to be, but I assume you are. If you're squared away, plugged in here, you are. Okay, congratulations. Now, we'd love this to bust down, wouldn't we? We'd love this to be a flat top and just carry that short all the way into the dirt. We would just love it. Why? Because it'd just be a sweet short. When you get a nice short like that, you're like, man, this is nice. We need to do this every day, right? So the problem is you're going to sit there and we're going to say, well, fantastic, let's carry that short down. Unfortunately, and fortunately, on NVIDIA, we don't have this 200 weekly. We don't have this line in the sand, which is the dictating literal level for us to operate at since time eternal on Bitcoin. Since the line printed, it has been the level to pay attention to, that 200 weekly. Like on NVIDIA, like, well, we haven't run into that on NVIDIA. Well, the problem is what? For correlative purposes, which we definitely pay attention to, on NVIDIA, if we're saying we'd like that short to really pay out on Bitcoin, just understand what you're asking for. Yeah, because on NVIDIA, you have the same pattern, guys. So unless you're just gonna, well, I'm just gonna count on a complete breach of correlation while we're looking at the same exact pattern on NVIDIA and on Bitcoin. We'd like to power through on the short to the downside. It's just a fact. You're in a short. Ask the people in the short right now, am I bearish or bullish? I'm looking at the 200 weekly moving average. I'm going to be bearish under and bullish over for as long as I look at the 200 weekly moving average, period. Okay? Call me whichever category you will. I want to be bearish under and bullish over. If I stick with that strategy based on back testing, I'm going to be a phenomenal Bitcoin trader. Phenomenal. Like better than good, phenomenal. Okay? Phenomenal, guys, on the 200 weekly, period. So the differentiation here that we'll note, and yes, there's room for outperforming asset, whether it be Bitcoin or NVIDIA, wanting to have your short pay additionally here on your daily chart for Bitcoin is really, really important to note here that we're either going to have to see a divergence in terms of the correlation or a lack of correlation. Let me pull this. Will you go back over there? Right, very nicely done. In terms of that pattern, I didn't want to lose it. So you're either you're asking for a break in correlation. I don't want, me personally speaking, for anyone to be financially harmed with Bitcoin. I don't want that. But anyone that I know that's even accumulating it or has been accumulating it or holders for a very long time, et cetera, that are friends or family members that are that have Bitcoin, I will say that I tell them, and they know it, that we want it to go lower for longer. I've explained to them technically what that means. They understand it with a very strong technical understanding in terms of, oh, so you want it to go lower for longer and then it goes higher, relatively higher. Talk with a trader worth their salt in terms of lower for longer and then higher. Is whether or not you're accumulating or you're trading, it's a nice dynamic. You don't want to get caught up in the lower for longer, but within the expressions of volatility there and below, each measured move with your amplitude is more of an opportunity to the upside. You know this, we're always trying to recreate those dynamics with the same amplitude move from the downside to the upside, and it just gets difficult unless you go back down. So with that said, immediately we could be happy about the fact that you're in the money on your 200 weekly. Congratulations. Congratulations. That's the bottom line. Not much to congratulate over, but it's a what, a 4% move? A couple of days here. Let's see. Let's take a look. 4 or 5% move. 4.5. Call it 4.5. So that's the difference here. As you're short, we find ourselves like, oh, good, let's go. In terms of you're getting paid on this short on Bitcoin, put it into some perspective as you look at NVDA. We got the same thing here. We got the flat bottom support ascending line. So hold on. You know, now Bitcoin's flirting with the return feature to this flat bottom support. So to the extent that we want Bitcoin just to hammer down here, yeah, we're noting at least our directional, our directional, what do we say, just directional impetus here as we were to look at Bitcoin versus NVIDIA. Now we do know on Bitcoin, what do we have? I think we have some bulls that could be interested in a recoup play to a specific descending triangle. True, we may have to hunt the best time frame to really come up with this, but yes, look cross time frame. But yes, nice confirmation. Shorts waiting at preceding level of support, flip to resistance. Note that there are shorts here. What just did this? The NASDAQ just did this. True, the last week. And what happened? Well, the short stopped out. Boom. Yep, on a flat bottom support. You got it right. True? Yeah, on the macro. So you saw this move last week on NASDAQ. The reason we look at equities, NASDAQ, what were parked at preceding level of support? Shorts. Did they pay? Yeah, they paid here. They didn't pay on the NASDAQ, right? So you either flipped and made money or you sat there and stopped out. No big deal. Trade another day. So we're seeing the NASDAQ and the correlatives of equities lay over nicely directly into our Bitcoin trades. Nice to see that fact. Let's see where we're at on, and there we go again. Way to go, bulls. There you go. It's just, it is what it is. As a matter of fact, right now, you're going to test this line until the line becomes a little bit, yep. And this is the problem with retesting and retesting and retesting and retest. It's just, yeah, you've worn your welcome out at the 262.89. Fact? Yep. They're at least going to make it a little more uncomfortable for you to get paid at that level. You've gotten paid 1, 2, 3, technical 4. I mean, very rarely. We see this sometime on the larger scope picture of, let's say, the 200 weekly, like a real reinforceable macro level. It pays all weekend, right? That thing paid for 2 weeks, right? So as you look at Tesla, I mean, from a day's stand, at some point, the sellers are pushing into this level consistently. Bulls are just parking, and now they're parking a little bit lower, right? And we'd want to look at a carry down feature resistance to support in line with the overall dynamics of a symmetrical triangulation. You got 1 and 2 options in terms of those measurements. You got that, you know that, New York Institute of Finance, right? NYIF, where Wall Street goes to school. Looking at the dynamic, we're prepared for a flag formation based upon a parallel carry down from resistance to support. So this would be the pattern to fulfill, period, for the bulls. You want to pick up, you want to decide, okay, great, we're going to go ahead and do something amazing here in terms of trying to get up over and out on Tesla, on the macro considerations. Alrighty, we're going to try and get up over and out this inverse head and shoulders. Left shoulder, head, right shoulder. Yeah, okay, well, this would be your moment to really schedule into and say, fine, we got a bull flag, how we doing? I think we had this drawn out here a little bit before. Nice hit into lower band. 15-minute again with a nice candle set where underneath. Pushed, did push. A bullish bear, bull bear over under. Paid downside. We're seeing that again. We saw it this morning on the 15-minute. Just note the fact we saw it on the 15-minute this morning. Top band hit on Tesla, and we saw a bottom band hit. So that 15-minute is really, has said good morning and is just in the process now of saying good afternoon, at least in New York. Yep. Okay. So that's on the map. Put a star on that or something. That's important. So that's the level to hold currently, without a doubt. And what do we look at? What do we want? We want to look in and see if we have any volatility. We're getting it, but it's not necessarily in the level or the structure that we'd like to participate in right now. I think we'll agree with that. Let me take a look at the bottom here. Again, what re-engaged 6 hourly. Again, the 6 hourly engaged again on the specific cap line. Note that, and please just tag the 6 hourly on whatever you're looking at. One of your screens. You just open that up and place the 6 hourly in and around somewhere so you can take a look at it. It's been consistent enough. And we decided to include it on our specific target framework here. Okay, see if we have any active targets. Check out the daily to the downside. Let's do that real quickly in terms of daily to the downside. You got it. Where are shorts parked? As we look at the specific interaction here on the daily, and just understand how I did that. I went to the Bitcoin, I went to our chart on the right. I saw the daily is below, below. That's going to tell me the specific standard deviation and 20 moving average. So we have a target to the downside on that daily. So I'm going to go into the daily chart and look at our lower pro line on the daily picking up, and knowing that after a cross under the specific 20 moving average, can we rifle down to the lower side band? Sure. Where are orders parked shorts? We already saw that on a different time frame, on a smaller time frame, but typically that 20 moving average is going to be loaded with shorts after the cross under, right? Paid a couple times the preceding zone. So let's take another look at, let's see, Bitcoin. Take a look at that daily NVDA. Looking okay in terms of no immediate urgent targets. Review these though, review these yourself. And we're kind of in the clear. Actually, let me go down to the 5 minute. Let me go to the 5 minute on each of these and make sure that we're calculating all the way up and through. Hold on. Nice action. Nice recoup. Engagement shorts to the downside. Nicely done. Nicely done. Let's take a look at NVIDIA now. It is challenging to trade rising wedges, and particularly with a flat bottom support, lateral pickup. Now noted, we have the level here preceding resistance, which accommodates this feature. You got it. And we got a little bit of a play to the downside back to that 4 hourly. Just note such on Bitcoin. 4 hourly green buy line. Engaging again. Looks like a new candle just opening up on that 4 hourly green buy line on Bitcoin. Let me make sure what we got.
Blackjack Neon 4 hour.
This was called Hook Pro.
All right, got a little bit of a. So you're seeing this over under like engagement here of there's a kernel calculative, very, very, very valuable in terms of its precision in the market overall based on our back testing. What we'll say is, as you look at a green buy line, it is relevant enough to where we're parked on it on the 4 hourly period. And you trade this enough, you know that it's just We like to see and expect to see interaction with these levels. And that's really what we're about. We're about identifying this Bitcoin. We're about identifying these levels and deploying the proper skill set to where we can interact with said levels, max probability function for max profits. That's just it. We want to identify unfairly high prices. We want to identify unfairly low prices. Okay, that's a part of the structural integrity and framework fundamental of technical analysis in the markets. That's standard, everyday, common terminology, right? Unfairly low pricing, unfairly high pricing. We want to identify the situations where things are unfairly low or unfairly high, okay, in the markets. And that's an objectively viewed statement. It's a fundamentally objectively viewed statement. It's like, I kind of feel like it's a little too high. Not that, guys. There are calculations at work typically based upon the preceding levels of volatility, et cetera, which will give you that understanding, or at least the calculations to operate there and with. Looking at, and let me go ahead and do this real quickly. Let's take a look at where's the max probability move right now on Bitcoin, just based upon the last 40 years of price action. Okay, deviation, of course, expected. Variation, of course, expected. But the descending triangle would have a max probability of 26,544. Period. Just based upon, again, let's get into this, maximize the most extreme calculatives we can come up with, because we are on what? We're on the candle wick. So you can understand that being on the candle wicks and achieving that max probability, all the volatility we can bring into our equation in terms of the amplitude move to the downside is going to be captured, the entirety of the volatility, because we have what? We have the entirety of the wicks included, not the lines, more consolidated view and more consolidated targets. And we have the entirety, right? We're seeing a return to, noted, remember said curvature and handle. That was a nice move. Stepping out up and over, right? That was a nice move to the upside. So we're seeing a return to that preceding pivot. And just understand the probabilities are the probabilities. 50% completion, max completion would be down to the 25,915. Essentially down to this preceding pivot here, okay? So just understand your max probabilities. That's it. Flash trades along the way, sure. You get stopped out on a trade or two, sure. Bound to happen. If you're going for high-level precision entries, yes, bound to happen. Let's take a look at the 5-minute on a video trying to pick up after the completion to the lower band. Boom, ricochet into a nice hit into the 20 moving average in the cap line. Yo, nicely done. Nice to see that fold over in terms of the momentum. Nicely done. Nicely done. Nice to see that re-hit. We saw that and just discussed that on Bitcoin in terms of the 20 moving average down and under. Where are the shorts waiting? Boom, right? On that 20 moving average. We just discussed that on Bitcoin. So nice to see that lower time frames, that increased volatility of equities just provide us that dynamic to properly evaluate. Also, what engage 15-minute cap line, boom, nicely done. 15-minute on point again. Tesla just kind of dragging its heels today. Slow motion rewind. Come on, Tesla, get up and out. You got lull everybody to sleep, and then you're gonna just rip around. It's like, man, Tesla made me sit there for like 6 hours straight. It's like, hey, you got to sit there 6 hours straight, man. These are big moves. These are nice moves. We like. I don't love the patterning. I like the notion that we've held so strongly in the support level. If we cram into this corner, I am not going to be a fan. I will tell you right now, nor is anybody else who trades a lot. Pay attention. If we cram our way into this and start to hula hoop around, and guys, we don't want to, we that ain't our, we don't roll like that. No, guys, no. I'm going to go ahead and say we don't want that. Do not throw us into a corner, paint us into a corner here, and expect us to be any kind of excited. The closer we get to any apex in terms of a constriction is just a no-go zone for us. We want to break out now, okay? The dynamics are in play for us to break out in this zone within a threshold, Okay, if we were to look at the percentages, 2/3 is fine. If we can get 2/3, that's fine, guys. We would like to get that 2/3, maybe up to 3/4. Okay, if we can get up to 3/4, right, that's fine. If we get 2/3, 3/4, we're fine, right? Either one of those, but not up into or 90% up into the corner. Where 95% up into the apex. Don't throw that at us. That's not what we're looking for. Just generally speaking, that is not what we are going for. Period. Noted. Yeah, makes a difference. I'm not. We got a lot of traders looking at that type of rationale continually in the markets. 4 hourly top. No, it's not. Hold on. Come here. Get a good wick. There we go. Off by probably about a quarter again on the top band hit. 4 hourly noted with the cap line feature underneath. We're not crazy about the red candle, huh? You get an appreciation for the green that we've seen on the screen. Not real crazy about the red, but we're at a critical level, are we not? We are. So, understanding that momentum again needs to maintain. Look what we did. We flipped the cap line. Ouch. Why did we do that? Operated just like the 20 moving average that we just saw, right? Setting down and under the cap line. Who enforced this? Bears. Boom. Nice move. Not bad, huh? 1.07%. Nice to see the cap line dynamic play that we were just talking about for the 20 moving average. That cap line flips or we don't get a change in color. We do not get a change in color if we do not flip that cap line. So your 4 hourly signals that are just gangbusters, we have to pay attention to that cap line flipping. Yes. Complication along the top is that we have a topping formation, as we're also trying to pick up on. Everybody's really scheduled into this one here, huh? Yes. It's a throwback. It's a throwback. This. Expanding volatility, throwback to preceding level of resistance. Looking at this breakdown. What's parked here? Just go through it again. You pick your time frames. We got ability to look at one or a few here on this small screen. What's parked right here after a potential breakdown of a topping formation? Who's here? Who is going to reinforce this? Bears, right? Shorts. Remember Bitcoin? Yes. We go back to the specific time frame we found this on. Where are we at in terms of the? You're going to get caught up in a time frame differentiation. We can pull this up on the hourly. After the support line breach, who's parked here? Bears. For what? Shorts. We saw the differentiation on the NASDAQ, right? Let that sink in. You start to say, well, man, I'm long here on the pickup of the parallel carry down, and then I'm having, you just are, right? I'm long here, I get it loaded, but I'm long right here on the support line pickup. That's good. On the standard deviation, that's good. You got paid. Yes, I got paid, but, well, you got paid twice. Okay, fine, I got paid twice, but, how is that helping me? You're going to say I know it's because I'm long on the specific, I got 0.4%. You got 0.4%. You did. You got 0.4%. You kind of got this below you too, huh? I've got orders there. Good man. Good woman. Okay? So just understand the dynamics in play. Period. Now is when I want to digest this. I want to look into what? Don't even say it. Lower time frames. You got it right, huh? Let's just not look at the screen and just have that practicum where we know something's going up or going down. Spend enough time on the lower time frames. 6 hourly being retested. In play. We'll just note the 6 hourly because it's been somewhat consistent, and I'm really, really interested in the 4 hourly. You got it right. That 4 hourly cap line on Tesla, I'm interested in that. I want to see that hit. Looking at NVDA, it's gonna be a ways if I can get down. You're gonna have to get down, NVIDIA. You're gonna have to fill that gap, and then some to get down to the 4 hourly cap line. Let's see what we got. What paid? Okay, the weekly, huh? Yeah, I'm about to say, huh? Come on, weekly, huh? You're pushing up into the weekly ice cold short. Come on. Seriously? I mean, I know, but you guys get it. The weekly ice cold short? I mean, that's a heck of a short, huh? It's an ice cold short on the weekly, man. Whoa, that's good. It's 0.66% you got paid today. What'd you pick up on? Green byline on the weekly. Hey, you got a trade on the green byline. Boom, carried it up 12%. Bam. You just got another trade on the weekly time frame. Boom. Nicely done. You trade it? You had to look at it and decide you didn't want to trade it. Fact? Don't tell me that because we want to. Well, you're not trading based on the stream because it's all delayed. We should say intentionally delayed, so you will not trade or take it as financial advisories. Okay, let's see. I think in financial advisory, you're going to have to deal with like repetitive phone calls to strangers. Yeah. That is not what this is. That's it. A small knit group, a good group here. Let's look at that 5-minute rebound trade. Short entry on the 20 moving average on NVIDIA. Nicely done. A little bit of a, let's pay attention to this. What are you doing down there? Head and shoulders? Yeah. To the extent she wants to pull out some head and shoulders on that 5-minute. What do we got on NVIDIA? Come here. All right. What are you up and over? Like 3 rising wedges, correct? Yes. And I know you just want to push. Huh? You're gonna kick it. You're gonna let's roll this. Let's roll this this thing uphill. Huh? Yes. It's the Humvee. Let's roll the Humvee up the hill. Why not? Huh? That's what it's made for. Huh? You didn't know they made these things for that, huh? Yeah, it's a Humvee. We're gonna roll it up the hill. It's just need a little bit of momentum, right? We would need. They're just difficult. Capiche? We understand. So, lackluster technicals in terms of the potential for the breakout, but we still have the dynamics in play. We will admit for the inverse head and shoulder on NVIDIA with some expected difficulties. Tesla is in an exceptionally interesting macro level of resistance, potential for a breakout. Is it better for us to set this level before we actually break out? You can argue, guys. You can argue amongst yourselves. Let's see. I want to look at a side screen to see how some of our indicators are doing. Just velocity-based. Really digging into this. Some of these are just velocity-based. So I'm interested in velocity as it comprises some dynamics that we're going to find to be more relevant or otherwise. Velocity. And it looks like some of those velocity-based indicators that I'm viewing. Just how quickly is something getting going where it's going as it's tied into a specific regular signal that we would look at. Do I care if a signal crosses an indication and a signal fires and it's a real sluggish, low velocity move versus or crossover or signal fire compared to a higher velocity move or a higher velocity, a little bit more velocity in the equation? Yeah, I care. That's one thing that I am assessing on the side in line with some additional. So yeah, we're getting some good feedback, just so that you know. In addition to your cap line features, your RSI, stochastic, and MACD, we're getting some good feedback on our velocity-based, I'd say our filter-based trading dynamics that are at work. Yeah, not bad. Let me take a look at NVIDIA real quickly, kind of see where we're at on those same features, just on a side screen here for a minute. Taking a look, not bad. I'm gonna take a look at Bitcoin just on the side as we look at that level of resistance engaged, flat, essentially that breakout zone. On the 8-hourly or 4-hourly, you'll see that 8 hours is going to be really irrelevant. Looking at that 4-hourly re-engagement where orders at park, and it's just not it's not a surprise to anyone here that you would see a breakout here and you would hear me say in a cautionary tone, etc. But where are we right now? What are we doing right now on breakout? We're typically just not going long. So a little bit of some fireworks early on in the open on New York we get to pay attention to, that we got to pay attention to. Absolutely, without a doubt, just important to look at the dynamics in play for for the potential for that breakout. So bulls not getting the job done on that level, but noted, and everyone is now drawn to that level of resistance and that potential breakout with measurements. Demand is being evaluated, orders have been placed, and market makers building and building and hopefully not killing, building and hopefully not killing his, you know, who all he's structured in and out of these trades, right? You don't know. We give them some credit. They're letting us trade. That's a good thing. We're enjoying the overall market experience, but hopefully he's building a profile book to bring up or down and not killing the profile book in the process. We would hope that amidst all of their profits that they're making somehow. So a lot of volume goes across the table, a lot of profits generated. So this dynamic in terms of Tesla would be a nice, important level to hold. And there's going to be your 4-hourly cap line, just a little bit below it. So if we touch below this pivot, just understand that 4-hourly cap line is going to be the level to hold. We'll agree on Tesla. So nice hit, top level standard deviation on that 4-hourly. Just going to be it's a big move for Tesla overall. We're going to really be plugged into this move, the residual of the week, and on into hopefully next week as this level is tested. It's not just today kind of deal. That's not what we're looking at. We ideally really got to get Tesla in the big picture here. We have to get Tesla up and over that 275. Agreed? That's a nice level. I would say, well, why not go ahead and just trade that thing? Trade that on a breakout at 275. You could, to an extent, but you're going to be suffering from the same unfortunate condition of breakout with a reconfirmation. So on breakout, you've got some stop loss considerations and quick take considerations. So if you're trading on a breakout with a quick take potential, make sure that you schedule that into the dynamic of wanting a carry trade and a flash trade, one that lasts a few hours or a few days versus one that could last a few days or a few weeks, maybe even a few months, right? As you look at these and apply the rationale over to your asset of choice. Not surprised to see this in terms of NVIDIA cool off. Not surprised, but at the same time, and I'll just repeat it so that you understand it. Over a rising wedge on a breakout of a bullish pattern, such as an inverse head and shoulders or any pattern, when you see a rising wedge, we're just really cautious in this zone. I'm never. Rarely am I, and you guys can judge me, okay? Rarely am I ever not cautious on that. I kind of coyly removed a larger rising wedge, and then we went back to the backup chart, and it's got 2 more on it. So the bottom line is just be aware of what you're trading into if you're going long. Be aware of that and understand the challenges that it presents to you continually. If you trade a lot, you already know that. You know this. So it's more of us having a discussion rather than rather than anything else. One more thing potentially before I go. Let's take a look at let's go ahead and measure this. This is a side chart that I have. I'm going to bring this up for Tesla. Let's go ahead and measure on Tesla in line with, and just pay attention to the specifics for the triangulation. Let's go ahead and just measure to the downside that we would look at an amplitude move with a breakout. And let's consider that we do have a relatively conformant symmetrical triangulation. Hit 1, 2, 3, 4, partial turn and down. Okay? To the extent that we have a potential pick up below and it's differentiated, let's just notice some levels of interaction here along this target framework to the downside. And the $260.36 is anticipated with that 23.6 already having engaged fully. I'm going to put this in the back for VIP so that you guys have just a copy of this and understand that the 4-hourly is still strongly in play. Okay, deal? I think we got that. Let me make sure that we're into hedge in the back. I want to say good morning to all the VIP. Hope you're doing well. It's a pleasure to be trading. Bitcoin has been trading like she should. Hey, there we go. There we go. Nice to see some action on Bitcoin. We want the volatility, guys. Remember, bullish over, bearish under. Nice to see it. Nice to see it. Bravo. Bravo. 2.49% to the downside. Let's look at that overall move thus far. And that's good. We're working on 5% there. Working on 5%. on that move. Daily target to the downside. Pay attention to that daily target to the downside to the extent that we can hit it. That's a mean head and shoulders. You've got some additional targets that we'll put up in the back, etc. Or I think we already have in terms of the specific targets for a potential recoup move to that descending triangle across the top. And NASDAQ cooling off a little bit, just so that you know. The NASDAQ is cooling off a little bit, and we are into the contact zone with that specific cap line feature. Big deal, cap line feature. Pay attention. Cap line, 4 hourly on Tesla. If you guys will excuse me 2 seconds, please. All right, pardon me. Let's take a look at that cap line engagement, the level we've been waiting for. And we'd love to say we're just going to get a clean hit, absolute level of engagement, high level of expectation of this hit, given the interaction precedingly along this line. It's a calculated level of volatility and expression, okay? RSI stochastic MACD is a kernel of RSI stochastic and MACD, kernel value. So, looking at the level of expression here precedingly, evaluating its dynamic levels of interaction along the way and how specific or lack thereof that we've had, let's say a lack of specificity or an exact level of specificity. We're going to note such as they have been, as such has been presented to us or is available to us in the context of the preceding price action. Along the way down, it was the controlling line with a lot of give and take along the way, right? When it was bearish, you wanted to run for the hills when it said fire, right? Okay, you wanted to be, you wanted to run for the hills, guys. When they said fire, you wanted to go that direction wherever it was saying go. So it's just been consistent, you know, that in terms of also the pickup in these zones. It's been nice. It's been a moneymaker on Tesla on the 4 hourly. Let's wait and see. And here we got another trade and 0.2%. And I engage. And come on, throw it at us. What do you got? Where's the market? We want to see it. We want the hot price action. We want to move. That's why we're here, right? There's no use in me being excited about the price action if the price action isn't exciting. Let's go. And they're going to say, well, we understand, London, but you're going to make too much money. If we really do this the right way, you're going to be making too much money. Really, huh? Well, I'm going to have to look into that. I don't know about that. We're going to have to look into that. I mean, if you really give us screaming price action, right, we're going to have to look into that. You say we're going to make too much money. I don't know. It's paid thus far. Been waiting for this level. Congratulations to anyone who hit it. The question is going to be, are you going to reinforce it? What do you want to do? Oh no, we want to dig into the lower time frames. What are you on? The hourly. Nice confluent hit here. Now that hourly 20 moving average. John Bollinger, hats off to you. You've done a good job with your 20 moving average strategy. Come on, Bollinger, take a look at this. Look at that. Kernel calculation, RSI, stochastic, and MACD. Mr. Bollinger, congratulations on all your work. But on this specific instance, we happen to have the more highly precise level for entry on Tesla. We'll take it. Huh? We'll take it. We'll still proper hats off to John Bollinger. Huh? You know, we hope you're enjoying the market, man. You seem like you've been around in the markets a while. We hope you're enjoying it, John. Maybe we'll touch base. Huh? Maybe do a kernel calculation of your standard deviation bands. There you go. Yeah, blame someone else other than me when we do that, okay? We'll do a kernel calculation of your standard deviation bands. Oh, great. John's like, he's going to throw his book out the window. Like, okay, who are these guys? What are these guys doing, right? NVDA. All right. 15-minute picking up again. There's one for Bollinger. 20 moving average. Way to go, Johnny. All right, looking at 4 hourly top standard deviation. Let's see what we got. Not having it. There you go. Nicely done. Just the difficulty that is on this specific head and shoulders pattern. Nicely done. What do we have confluent there with? What do we have? Bit of a descending wedge. Is that exactly the way we'd like to see one? Not particularly. Not especially. What's in play here on this 5-minute preceding resistance to support cross trend line? Big time. You got it? Oh yeah. Resistance to resistance, support, support. So this line, NVIDIA is not being particularly friendly, but not particularly overly aggressive either. If you're accustomed to trading, you're going to pick up on this cross trend line. We just did. Let's see what we got. Level of support line, dynamic in play, differentiated, noted. I'm just going to tie up a little bit here with this specific 5-minute time frame a bit and see kind of where we're at. 5-minute time frame noted where. Oh, there we go. There we go. Good to look at the 5-minute time frame, right? We may not have picked up with this or on this otherwise. So we have another level of breakout as we step up and over these levels. If you're looking for a breakout up and over the 466.59, tag it. Noted. All right. Let's add an alert on that. Get a phone call if and when she can find her way up on and through. And you just see the levels that have been broken up along the way here. Level of resistance enforced. Even there below, and you'll just recall these levels that we traded, right? Looking for breakouts, even beyond that, looking for breakouts, and retouching levels of preceding breakout, right? So very few of these are not matching up with preceding demand zones, right? Noted. So we do have another level to climb up and above, right? As we would look at reinforcing this level of support. And what are we reinforcing? Where are we at? Hold on. 15-minute is highly relevant right now. We all agree. The 15-minute, that 4-hourly cap line is parked well below on NVIDIA. 4-hourly traded? Yes. Now, do you want to get caught up in the micro or you're looking at a macro potential here, like as such? Well, it's going to depend on trading style. It's going to depend on how proficient you are at the lower time frames. You're going to be operating a lot more quickly at a lower time frame than what I'm showing you. I'm not deterring you. I'm not trying to deter you from operating a lower time frame, though I express a lot of caution on it. They're great for training. 100 rounds is what I see the best traders doing. Big traders, guys, good traders, really great traders. 100 rounds, that's our custom developed approach to high volume of trades. So, it's a fantastic way to engage in the market and become comfortable with your level of involvement in terms of financial involvement before, never before you become consistent at whatever time frame with whichever asset you choose to trade. Particularly, we train on Bitcoin, so that's just because it is the most volatile. It is the one that'll scare the pro traders away. Let's take a look at this specific level on Tesla in terms of a potential carry down from a resistance. Yeah, it looked like we were about there, didn't it? Level of resistance carry down to level of support, and that would be a level that could be nice to see the bulls hold, frankly, in terms of that. It's just a regularized expression that that we would like to see the bulls hold, given the fact that we're at that preceding and really pushing into the framework of this breakout level. This is, again, a level that's held multiple times before the capitulation on the lower time frame. So we're now stepping up through this logic on the higher time frame. Okay, and we have some complications with some lower orders in this zone. So not a real dramatic day in terms of up a couple percent, back to flat, and down under a bit in terms of NVIDIA and Tesla overall. Bitcoin really the mover, the solid mover of the day in terms of its move down below that 200 weekly. We're happy to see that. Very happy to see that. Nice move, nice trade ops, guys. Nice trade opportunities. So reinforceable level as we look at Tesla is going to be the 4-hourly cap line. Get used to it. Plan accordingly, without a doubt. Engage your trade tactic on it. Okay, in terms of the level of proficiency, over or under, it's been consistent. So there are trade ops there, opportunities, guys. In terms of the over and under, the additional patterns that we see in play, hunt out those specific volatility expressions. The fact that the bulls gave a run this morning at the breakout on the macro on Tesla means one thing, that there's a consideration, multiple things, but let's say one thing particularly. There's a consideration ongoing for where Tesla could be headed. Okay, now a bull market is established really, and it can be the end of a bull market when everyone's position that could be long is exhausted. So pay attention, right? When everyone's who could be long is already long in the market. There's nothing to push the price of the equity or anything up, right? So, and this is New York Institute of Finance material you guys can review. But so to the extent that we're in the fold here, potentially establishing higher prices through a breakout and some technical mechanisms that people can justify and schedule into, it can have the effect of at least getting the participants involved and potentially taking even some value-oriented additional positions, either here or in this zone, for a potential move to the upside. You all know that I have been nothing short of bullish this whole way. Really, guys, as you look at this in terms of this feature on Tesla and on NVIDIA, really encouraging you to look up. There's the bottom line, okay? And I've just been doing that, not indiscriminately, but we held this level here, and once we saw, this was just the deal, guys. Once we saw the specific NASDAQ hold this level here, you know, and while we were along this level and hitting into a critical feature, we caught that 23.6 underneath. So it was easy for us to be bullish from a specific pickup level at the 23.6 underneath the descending triangle. So since this moment, I haven't had much reason at all. I just tell you, unless the shorts here engaged on the NASDAQ, I'm going to be long. Guys, we're going to be looking at a potential move back up into the structure of this descending triangle, and you're not going to find me, unless these were to hold, and they didn't hold, frustrated a bit, but this was the recoup move, reconfirmation failed, busted pattern back to this framework here. So if you have been wondering, it's like, well, London just thinks everything's going up. No, I'm basing it on a correlative that we're looking at in terms of NASDAQ, the primary index, and just in terms of the framework now, with the exception of Bitcoin and the over-under on the 200 weekly, which you can't ignore, technically speaking, right? You can't. So I've given that its own place, and it's important for us to be able to analyze the correlatives as they would exist between Tesla, NVIDIA, NASDAQ, as their additional and very similarly featured technical sets. You got it right. So we need to be able to look at all of this information. We need to be able to digest it and bring it into the foray of our trades, and we're doing a good job of that. I hope you understand the dynamics as to why this could get me bullish on bust. Yeah. Not easy. I mean, not easy. A little easier, I guess. I also believe in the, I really believe. I don't know what that means. I believe, but I'll tell you, I have a nice assessment that I would put some logical diligence into and have in terms of the framework of NVIDIA in Tesla, the product dynamics, the demand function, the production capacity of each in terms of an overall assessment that you would look at for either production of the chips or the production of the trucks or the production of the, you got it, guys, in terms of that critical, let's say critical component that's tied in with their earnings. That would be the key and core consideration that I would look at personally and have looked at personally to explore as to whether or not we can expect really just some nice surprises on the upside on some of these either earnings let's say price targets, price calls or analysts' recommendations, or on just a nice surprise on an earnings, like a blowout earnings. You know, earnings can be, you guys can tell me how they're working out if you're trading the earnings. They're not always as you would expect. If they are, you tell me, because we'd like to know how you're doing that. If it's always, well, you beat earnings, you're going up, great. Yeah, sometimes, guys. In terms of the dynamics in play on the NASDAQ, we have expanding volatility without a doubt. We had the broadening bottom as well that we fell into, so that was nice in terms of that broadening bottom formation, re-hit, and we'll just note for the fact that we recovered into this expansion of volatility equation here. Not comfortable. Note it. Note that we're heading back up to a level of resistance across the top. Note such. Very highly relevant. We concur. Tesla, NVIDIA, and Bitcoin. Nice hit from that 200 weekly. Let's take a look at Tesla. Just asking you, is enough enough? Do you have enough, guys? You made money on your capital control line. You made money, right? Is that enough? It's always the question. It's not can you make money. You made some money here, right? A little bit more. Is that enough? She's going to ask you, right? And as we look at the framework here, let's dig into, looks like we're at that 23.6. Got all kinds of technicals going on here, but it's just noteworthy now is the topping formation with that amplitude move carried down, and the engagement on the 23.6 is essentially at 4 hourly cap line. All right, so essentially with a push, but looking at the potential to hold, we're at a preceding pivot. So the pivots here have paid traders, right? We're at a preceding pivot level here, and it's just a bit of a danger zone as we're looking at just descending preceding pivots, and we're just knowing that the preceding pivots are acting as a level of resistance to support function. And it's not perfect. It's not perfect unless you're on the 4 hourly cap line right now, right? Unless you entered on the 4 hourly cap line and you're at the 23.6 and like, you know what? The bears who are parked here, they're going to have to get out of my way. I'm going back up into this zone, right? In which case you're a little bit excited. You made a good trade. Hey, true? You got it, guys. You got it. But you're going to have to tell the bears to back off this preceding level of resistance. Level of support. Actually, that is resistance, but I'll call this preceding resistance as well here. I know. Now, if you took and you had enough at the 4 hourly on the preceding take, hey, no problem. Did you make money? Congratulations. It's consistent. It's relatively consistent, or we wouldn't do it. I'm going to backtest this thing over like 40, 50 years. I'm going to call the guys who backtested the markets longer, and I'm going to run it by them. And to get rid of me, they're just going to give me books off their shelf and say, hey, I bet the answer's in here. How about that? You don't like my answer? I bet you can find the answer somewhere in one of the books I've written, please. I give a hard time to Tom Bukowski. He's nothing like that. He's awesome. Yeah, that's the kind of, when I say something's consistent, we're not going to do it if it's not consistent. We're going to spend our time doing things that are not consistent? Nah, that's not going to work. 0.6%, is that enough? You happy? What's your risk here? You have a preceding level of, let's bring this down just a touch. You have a preceding level of support. I know I can get into a time frame where we recovered into this. This is what she does to you. It's like, okay, fine. Can you pull up a time frame where we already got back up into it? And really we did with this confirmation hit. So technically, yes. What do you see above that you like? What do you see above that you don't like? What do you see above that you like? What do you see above that you don't like? If you're trying to go back up above. Clearly, immediately above, the preceding support to resistance feature, we're not crazy about it, right? What pattern are you working with below? V-shape recovery with a nicely structured, inverse head and shoulders. That's a nice one. You see the shoulder here, the shoulder here. What else do you see in here? What else do you see in here? What do you see in here? Volatility. You do, huh? Good. You're getting better at spotting it. True? You got it. Into what? Into our 4 hourly cap line. True. Nicely done. Very nicely done. Okay, so bears engaging. I already know. If you picked up on the 4 hourly, I've maxed out at a 0.68% move. Those larger time frames are just more consistent. We find that than a lot of this chop up and down. You guys know it's let's reframe into what do you see above that you like? What do you see above that you don't like? I see this. Yeah, I see that didn't recoup. True. We see this. I see that's in the process of recouping and really was unfriendly, wasn't it? Tesla, right? Tesla, she does this, doesn't she? Doesn't that destroy the whole demand equation? Based upon earlier, my comments, what am I focused on here? What am I really focused as I evaluate these volatility equations? What do I want to know? What do I want to know? I want to know the percentage of times that if I get involved right here, I'm going to recover at least at this level because this is a volatility expression. You're starting to understand a little bit of an idea that I would get into almost a demand equation on a failed apex, on a failed falling or rising wedge. Sounds like I'm getting into that rationale, right? look, we have a demand agreement here. We have a volatility expression and demand agreement. What's the percentage of time if a trader is entering on support here? How consistently is that trader being allowed to break even? Period. That is of ultimate concern to me. Very much so. And how frequently is it that I'm getting an opportunity, if and when, say, the case were to be that I were to have an entry long here, that anything below is just golden. Doesn't matter if she pushes down the middle. Doesn't matter if she glides along the level of support. That's the proper framework to analyze this. Not, oh my gosh, look at how far it down went here to our 4-hourly capital control line. Okay. Yeah, look how far down it went, right down to our target, right? So divorcing that from the situation, removing that from the analysis, the most important aspect that you could deal with personally and you can assess along with me is what percentage of the time that we see this pattern formation are we going to recover to this specific point, because that's an entry. We agree? Yes. Now you may ask very legitimately, what's the proper question? What about this recovery right here? Because you entered here, you fell out, and then it gave you this. It lets you break even. So, is this a target on this equation? Is this a target then? Am I in a value consideration down in below here? Right? And this will come into question and add a level of variability as to whether or not we're going to maintain this level as a target. Great setup for the question. Understood? Whether or not this will remain a target, irrespective of whether or not we get down into here on the pattern. So, as you were to properly discuss and analyze the framework of will we recoup to this level, its relevance is not just to the extent that we're still going to look for a 72% move up and out and over, but what is your value consideration as you're heading down? And do we just mark this bottom line as our target? It's a nice expression to look at a quicker, and this will be the differentiation, is you're looking at a quicker rebound to target. That's technically to the target. And now you're getting into the wedge tactic, failed wedge to the upside downside, because like, hold on. We're still in this wedge. We're still in this bullish perspective. So, you get it, guys? So am I going to maintain this target? Am I going to maintain this target here until we break this level of resistance? Because some traders want this to hit back onto the level of resistance. It's failed to properly. We still have a divergence. We still have a divergence of price line thus far to pattern expectation. So are we going to mark this as our target? If and when and to the extent that we continue to have a price line divergence, this is going to be something that we'll be able to highly count on. We are going to, let's see what we got. Let's see what we got. We are going to pay attention to this dynamic increasingly as we do recovery, as recovery trades to failed wedges. Well, let's also call it a pullback or a throwback to any pattern play. Agreed? Let's assess this and its degree of conformance, because it's a great technical question. And you have to understand targeting a failed pattern. If you don't understand targeting a failed pattern, we've got just a review. It is not, guys, standardized information, but it's good information. So that's going to be our question as we look at failed frameworks here, and within the nuance here of a recovery to this expected entry along a level of support, really rebounded, but it framed a great question for us in terms of the potential for this pattern. Is highly relevant here to the extent that we have a bearish engagement along a preceding level of support, that we have a beautiful line pickup here on our capital control line, RSI, stochastic, and MACD, which paid up about 0.6%. Yeah, perfectly engaged. And as we see the need to recover up and through to preceding pivot and to power up and through, this level is above. So I'm interested in whether or not, and we have a bit of a discussion as to whether or not a throwback or a pullback can be obstructed by a preceding level. Yes, but in the context thereof, let's open the discussion in terms of, will we target, now what are you looking at? If you're looking at a specific lead in and a potential bump and run, okay? The question is going to be, and it's a great question, because on a bump and run, on the breach of a level of support, can you count the breach as a target on a bump and run? If you understand that question, and if you can put it in the dynamics of a failed rising wedge or falling wedge, and you understand the entirety of that, then you are firing on all cylinders. That's good stuff. Hey, congratulations. I know you guys who got it. You got it. That's cool. So that's going to be something we're going to look into. That's on the map, guys. As part of the benefit of looking at the technicals, seeing what we can, what advantage, what alpha we can gain in the market is. And that's our new question for the day. And we'll continue to look at that question because it's highly relevant, hugely relevant. On the breach of support of a potential bump and run, is our breach the target? Hey, we like this, huh? That's a nicely formulated question presented. Bears engaged where? Yeah, they did. They are. You are. Congrats if you did. And it almost gave you a perfect entry. Almost as perfect as, we can't ask for too much more, guys. I mean, you know, if you're just going to be bullish, it's fine. But in terms of a highly precise level entry on the 4 hourly, bam. In terms of a highly precise level on the, this is on a 30-second, look at that level of precision. Hey, it's nice. It's not bad, guys. It's not bad. Shorts are parked there. You had to decide you didn't want it. If you decided you didn't want it, it's fine. But you had to decide you didn't want it. Truth. If you decided you didn't want it, that's okay. No problem. You didn't get it. Noted. Note such. You guys got it. Now, we'll note this expansion. We'll note that it's recovered to the specific level of breach of that potential bump and run. It's not a bad question, is it? We will notice, in terms of the V formation, that inverse head and shoulder, the dynamic in play. Let's go ahead and draw out what would be the next. Let's see. You're going to have another volatility expression in play. This one's not bad, not bad. Let's see what we got. Why are these beneficial? Because they get you structured in terms of your pickups lower. Can you identify these quickly? Yes, you need to work on it. There's some good producing patterns overall. Okay? So let's work on this pattern. This is going to be on the 30-second. All right? Orders are where? Orders are down here. What would a partial return and pickup here do? It would give us an inverse head and shoulders. And it would give the bulls a retest and push the bears along a real clean pickup, right? In terms of a preceding level of support, that breakdown of that topping formation, you got it right. Not bad technicals. You really want to see the bulls pick up on this macro pattern on Tesla, but guys, is it one of those moves? You're just going to have to say, is it one of those moves that's going to require a little bit of real, guys, we're going to need some powerful fundamentals come across the table. Can we? Can we get some powerful fundamentals out of Elon and Tesla, Cybertruck production numbers? Something just, there's so much going on in Tesla. It's just turned into kind of, you know, it's a big story. Like what additional government can he talk to about, honestly, guys, what additional government can he talk to about putting in primary additional headquarters and battery manufacturing plants? And I mean, there's a lot going on. So to break the mold is something just staggering in terms of, like, we got the Cybertruck kind of coming out, right? Talk about the dojo. I don't want to wait around for the, just in terms of Tesla, it's exciting to talk about, what is it, Optimus? Hey, that's going to be okay. We don't want it on a delayed production schedule, particularly, just talking fundamentally, not a preference. Looking at a potential flat top resistance, nearly, something that could help the bulls get up over and out. being assessed on that 1 minute time frame. Let's take a look at that 30-second again. Yeah, there we go. Okay. Let's take a look at specific flat top resistance, obstacles to the left. And let's look back at, now this is going to be, it's a, what do we say? It is a bittersweet for traders who already took at the specific 4 hourly cap line. They want another hit. True? Yes. If you entered on a perfectly precise move, did you enter with enough for a carry trade and enough for a flash trade? Did you enter 2 trades? How did you handle this? We've been discussing that. If you need to work on it, work on it. That's on Tesla. Orders parked where? Primarily here. We know this. Tesla could get down in a hurry. You all know that. So bittersweet, I'm saying, to the extent that we would like another hit along this level of support and a rehit on that specific 4 hourly cap line, and make sure that you understand the precise perfect hit the first time could push a little bit, because we do have a potential lower level of support now. Capiche? Do you want to call this a topping formation here and measure out in terms of the expectations here? Certainly can. And look at the specific pickup, let's say on the 38.2. We know the 4 hourly is a commanding time frame right now with that capital control line, right? We know that that would put us right at about an even double bottom here, 50% engaging. If we were to look at this topping formation here, yes. So as you look at some flash trades and some interest in that 50%, you see the traders trying to pick up in this zone, max probability completion. You have the 4 hourly just hammering with some orders below, right, on that capital control line. But you see the 50 just pausing there. Traders not knowing, going to get paid or not on the 50% right there. That would be called a push, right? Pushing, grinding, and there you go. Golden pocket. So the big guys are where? They are here, right here, and they already got paid. True? You got it. So this becomes like what? This becomes, what is this? Yeah, you start looking at this, what is this? Why? Because big guys parked in shorts here, fact. Did it bother you at all? Did it even challenge you at all? Preceding level of support, did it fuss with you at all? No, not at all. Perfect pickup here. Technical noted. Kernel function. RSI stochastic MACD. Perfect. Bam. 4 hourly. Perfect. Perfect pick up here. Boom. Preceding support. Flip to a resistance. Bam. Perfect. So you just handed the bulls a very nice trade. You just handed the bears a very nice trade. Fact? Bit of variability here now. The bulls, you had it easy a second ago. Perfectly easy a second ago. Right? As you're looking at a rehit into that 4 hourly, it's going to be here. We know it's an exact low with a preceding low. It's going to be right in here. That's just it. Look at the 786 is picking up. Pushing who? Guys who got in at the 50%. The maximum probability completion. Gave them a break even. Right? 50%. Guys holding this level. Got them back to break even. True? Let's note that. It's important for us. It's a maximum probability move of this topping formation. Okay? So to the extent that it's paid at all or recovered to and offered a break even for the traders there, that's highly relevant. We want to trade something that's behaving fairly technically well. And I mean fairly in the context, well, I got in at a level of support. Well, that's fine. You think it'll let you break even? Yeah. Okay. We pay attention to those dynamics in the market. We pay attention to that on the assets that we focus on, particularly in terms of the volatility, as we could capture such, right? And the pattern framework within which we can. So 786, quite a grind below. But these are, let's see how big of a move this is. Really, guys, these are small moves. Small moves. Bigger move where? 4 hourly. Bam. Agreed. Traded. Noting 4 hourly top standard deviation. Off by what? It's been off by a quarter or so, right? True or false? Been off by a quarter? What is this now? Let's just pay attention. We're looking at within a quarter, 0.24. Get used to that quarter on Tesla. And then some, depending upon your spread, okay? So essentially, we're seeing a grind along that 50%, and Tesla's been a little catchy all day long. Bulls just got paid, bears just got paid. What's holding? Hourly. Bam, bam. 20 moving average. There we go. You can use the 21, no problem. You can use whatever moving average you choose to whatever average you choose to use. This critical level is what's in play. Preceding resistance. We hit multiple times in this level. So bulls and bears are just kind of being evaluated right now because both have been paid in the last, within this last sequence of trading events. 15-minute, again, critical on NVIDIA. Boom, boom. Yep, 15-minute has been critical. Let's take a look at the hourly. Have anything to say for us on NVIDIA cap line? Let's see where we're at. Cap line preceding, pushed, paid a bit. It's tough, huh? Those rising wedges. We have the inverse head and shoulders on NVIDIA. You got it. I just somehow think maybe the market needs to be complicated enough to where not everyone can understand it. You know, in terms of our approach to it, that's never my goal, but we have some kernel calculations. We have some really high-level functions in terms of machine learning and fusion signals. And so to the extent that the alpha resides in small areas where not everyone can understand it, that's fine. Maybe it needs to be like that to an extent, unless it's a popularly guided investment attracting the populace. We're day traders. That's what we do at a sophisticated high level. So that may be the case. Top standard deviation band hit on 4 hourly, another critical level on NVIDIA, like it just was on Tesla. Seeing really a reinforcement of the specific pro top line. We see this, don't we, on Fire and Ice? We see this. It does occur daily. Daily top band hit. Let's take a look, guys. 15 minutes really has been something to pay attention to on NVIDIA, Tesla, etc. The 15-minute, just don't ignore the 15-minute. You're going to be ignoring part of the story. 20 moving average, needing to recoup. Let's take a look at the patterns real quickly on NVIDIA on the lower time frames, and we will get up and out of here. I will go hit some iron. Framework in play, yes. Wedge, bit stodgy. You guys agree? Just a touch. This was not a bad fall out of preceding bull pennant to flag. Nice. Nicely done. Be nice to see a little bit more development in here, honestly. I'd either go to a lower time frame to kind of see what else we might be looking at. Let's see, a 30-second or 15-second. Let's go down and see what we have. Dun, 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 dun. Let's see what we got. Flat bottom support noted on the 15 seconds. So that tells me the lines are also laid out as such. Okay. I don't like to draw these out in terms of kind of the half diamond formation, especially if I push too far back into the preceding, but we'll just pay attention to that. To the extent we've got a descending triangle with a curl-in feature, that's fine. So looking at the framework, what do I want? I want some volatility. And by volatility, I want an expression. Let's pay attention where we're at. Let's see the recoup. Let me go back here in terms of, where do we have? Let's go into 4 hourly. I'm gonna have to go into my other time frames. Let's see what we got. First of all, I hope you're trading well. Hope everything's going well. Hope you had a great day. That 15-minute is in play on the 20 moving average. Looking into the overall equation here, we have an inverse head and shoulders on NVIDIA. It's been a strong day for NVIDIA. We're pushing up and along the hourly cap line. That's the level in play currently. We knew that last hour, traded a bit to the upside and pushed here and along that kernel calculation of RSI, stochastic, and MACD has been the threshold line for a number of days here. Let's take a look at, once again, the Tesla scoreboard and a repick up on that, not a repick up on the specific 4 hourly, but a rebound into some bear country. There we go. Will you call this a double bottom potential pass through? Potentially. Potentially you can call that a double bottom pass through. So we would call this a double bottom, meaning what? We say 2 for a double bottom here, and then we say 1 for a single pass through here for a recovery and a potential move to the upside. True? Yes. That would be a 21 double bottom single pass through. 2, 1, blackjack. 21. Got it? So we refer to this as blackjack. Okay? In the context of the increasing or the expanding volatility, would have been nicer to rehit. That was the bittersweet portion of this, the rehit potential on that cap line 4 hourly. Yes, indeed. So I'm going to go lift some weights. Hopefully, hopefully you're doing the same, doing something aside from the market. This is one of those days you could just trade Tesla all day long. That's really how I've felt the whole day, and that's really how I still feel. Trying to recoup and push up through this bear line. Just remind yourself of one thing. Bulls got rewarded perfectly here. Bears got rewarded perfectly here. And what do we got, guys? In terms of the specific features today, the Bulls failed. Bulls failed. Huh? Failed to break out, up, and over the pattern dynamics. You had it. I mean, what is it going to be? A screaming day of like 8% to the upside on Tesla? Could have been, you know. So as we look at it, like that would have been fine. We've been bullishly oriented through this zone. Obviously bullishly oriented through this zone. I've been bullishly oriented with a pickup level at like 110. So that's been interesting to watch the entirety of this price action. We're kind of glued to the TV at this point in terms of Tesla. It's what we do. We enjoy trading. I want to invite you to never be overexposed at any higher price. Always, always, guys, do your own homework big time in terms of your pickup levels, your own tactics, looking at that hourly 20 moving average, whatever your tactic is. Get into it, master it, make sure you own it the way that you need to, and don't dabble around with say an unproven track record and real cash. Make sure that you are plugged into the right framework in terms of your training and the deployment of your skill set to where it makes sense for you to be trading. If it doesn't make sense for you to be trading, then this is not the place for you. We go through a rigorous amount of 100 rounds in terms of the actual just high volume trading that we reinforce as just a good training mechanism, and we've seen fantastic results. So that's just the bottom line. If you're not plugged into that mindset, you want to just show up and trade off of these signals, then no. If you want to garner into guys our signal set, it's just not the place for you. This is a place where we respect the people who've been VIP for a long time. We want to shout out to all of you. I see Liam on the top screen. What's up? Scotland in the house on the top right there. I want to shout out to J-Mac, California. What's up, brother? All the Land Down Under crew. Hope you're doing well. Shout out particularly to Venus. Venus, pleasure to be building with you, trading with you in 2023 and beyond. Can't wait to see how the fourth quarter works out. That's the way that we are plugged in. AJ Crypto, shout out. Luke, shout out. Shout out to, and I'll say Tony and Chris from Land Down Under. We've got, guys, the best group. We know what we're doing. Steve-O, haven't talked to you in a bit. Hope you're doing well. And the other guys in the back. This is geared for you, and really primarily for you. You are my primary consideration. You know that. Your success is the reason that I do this, and we're not a success unless you're a success. And if you're not a success, you've got to change that. It's fourth quarter. Let's have a good fourth quarter. Work on that consistency above all else. Everything else should follow once that consistency comes into line. It comes into the framework. And if you're a preceding VIP and we haven't chatted in a while, well, hey, maybe it's time to, I don't say pick up the phone. I think I changed my number, not because of you, but I think I changed my number, right? But I just did, because it has nothing to do with you. But if, and you know me well enough, you're old VIP, you understand it's just we have a sense of humor around here. But shoot me a DM. I hope everything's well with all of you. We're looking forward to the determination, as we look at a little bit of a coil reversal here. We're looking forward to the determination on Tesla. Can you get up and over this line? All right, if you want to play it safe, break out up and over this 270, call it 279. If you want to play a cup and handle to this effect, okay? We got a gap to fill, do we not? We got a gap to fill at 290. Hey, we got a gap to fill at 290. Eh? Let's see what we can do. We got some help from Morgan Stanley, et cetera, in terms of their price targets to the upside. They're reinforcing that 400, but never blindly trading in any one direction. The daily momentum looking good. The specific 4-hourly momentum not looking great, but providing some great trades to the bulls and bears there along. Pay attention to this pattern in the back. We're going to be looking for some additional price action this afternoon. We will come to you with a stream on the close of New York. In the meantime, guys, take care of yourself. This is London with Bitcoin Spike and VIP Trader.